All right, guys. Good morning. Can you hear me? Hi, online people. So many people have come. Not bad. Hi, guys. How are you doing? Hi. Good morning. Come. Online people, how are you doing? Can you hear me? Mic testing. Check. Check. You guys can hear me? Yes. Super. Take a minute. Okay, guys. Let's begin. Just 2 minutes. 12 o'clock. We'll start sharp. One second, setting up the final things. Okay, so online people, can you hear me, see me, all that fine? Am I audible to you? Please just say thumbs up or yes or whatever. No, if it's a no, it's a no. Let me know. We'll begin soon. 1 minute, 12 o'clock sharp. All good? Super. All fine, cool, super. Okay, guys, 12 o'clock sharp. Let's begin. Hi, good morning. How are you doing? I can't hear you. What is this? Good morning. Awesome, awesome, super. Online people, are you ready? Is this material available online? Yeah, you can purchase the material. It's a published book. You can pick it up. Okay. Yes, let's begin, my dear friends. So, welcome to the revision session of taxation. So, the plan is very simple. We will not be wasting time. Quick, we'll finish off. Earlier, the plan was 6 days, but then I forgot I had a corporate workshop to handle. I forgot about that only. 2 days, 26, 27th, I'll be busy. So, we will finish it off. 12 o'clock, we've started. We'll go till 3-4 hours. We'll take middle. I'll give you a break also. Online people, for you also, you can take a break. Cool. So the agenda is today we will be doing with basics, quick basics, and of course the residential status. Many changes have come which people are not aware, which are applicable for November examination. And of course we have to do house property today. That is my agenda. Tomorrow that is going to take PGBP, very important chapter, and it will continue. It's a long chapter. And today we'll try to finish, we'll start off PGBP also now, and then tomorrow will be PGBP, and then the third day we will try PGBP. Then TDS is also a very important chapter. People ignore that chapter thinking it's very easy. It's easy only, but then we have to do many hidden points are there in that. So we'll have to do all those things. So TDS, we will try to do the TDS portion. And of course we also I have to finish basically all the heads of income. Predominantly. So we still have IFOS, capital gains and salary. So we have to do it because heads of income, if it's over, other things are fine. So predominantly the questions will come from which areas? From PGBP, from house property, from salary, then from IFOS, capital gain, all these. Capital gain is also very important. Capital gain and IFOS we can do together. Anyway, so let's start off. Let's see how it is. It's a marathon session, so it's going to be a revision. So I'm assuming you have already studied once. Income tax book, if you opened first time ever, then this is not the class for you. At least one round you should have studied. Assuming you're writing, all of you are writing in November. Okay, cool. So I'm sure here also all you people are writing in November only, guys. Super. Awesome. Shall we begin? Yes, hello, let's begin. So first of all, we know 100 marks paper. So it's going to be very fast as possible, but try to keep up. But we will do many examples. I'll take you through everything. Okay, full, complete, thorough revision. So 100 marks, as you know, 70 will be descriptive, 30 will be MCQ, and of course in that 100, 40 marks is our GST paper and 60 marks is our income tax paper. It's divided into obviously again MCQs and what do you say, descriptive. So the thing is very simple, 30 marks MCQ. In that 18 marks will be what? DT MCQs. And here part A, we have 42 marks for direct taxes. We should know the structure first of all. And in the 18 marks, there will be a mixture of 1 mark and 2 mark questions also, obviously. As far as part A is concerned, direct taxes, 42 marks will come, of which question number 1 is compulsory. How many marks? 14 marks, compulsory. Question number 2, 3, 4, 14 each. And you have to score how much? 2 out of 3 you have to choose there, you have to write. Whereas question number 1 is compulsory. Very simple as that. So, the Constitution of India, Article number 265 speaks about tax, and the tax is levied under Article 265 of the Indian Constitution. Who will levy the tax? Union government. Union government means what? Government of India. Nirmala Aunty. Nirmala Aunty will levy the tax. Right? It is there in entry number 82 of the, union list, so to speak, which says tax on income other than agricultural income, which means the power to tax agricultural income is given where? Entry number 46 of the state law. None of this they will ask in the exam, don't worry, just doing the basic of 1 minute for you to understand where it's coming from. So entry number 82 of union list is what they say. Anyway, so all this is not relevant for us now. Coming to this. Now, what are the sources of revenue for our country? One is definitely from the business that the government companies do, like the public sector undertaking like BHEL, BEL, ONGC, HAL and all those things. And taxes are of 2 types, direct tax and indirect tax. And what we are doing now is of course direct taxes. For our November 23 examination, what would be according to you? The Finance Act 2022. So it's split into what? Financial year, that is previous year, and assessment year. Assessment year means what? It is the year in which the department assesses the income. And financial year is the year for which income is computed. What is the financial year? 1st April 22 to 31st March 23. And what is the assessment year? 1st April 23 to 31st March 24. So the Finance Act 22 will have the financial year or the previous year 22-23 and the assessment year 23-24. In 23-24, so for the previous year 1/4/22 to 31st March 23, the assessment will happen in from 1st April 23 to 31st March 24. In that you have to file something called return of income. When will you file return of income? For individuals you have to file before 31st July 2023. For companies you have to file before 31st October 2023. That is called the assessment year. So again, for November 23 examinations, what will it be? Finance Act 2022. Previous year 22-23. Assessment year 23-24. Clear all of you? Yes. Now, certain terms which are important. First of all, what do you mean by rules? Rules are prescribed by CBDT. What is CBDT? Central Board of Direct Taxes. They prescribe the rules. Are rules part of the law? Very much so. Rules very much are part of the law. So your income tax paper will have both the sections as well as the rules. Clause. Clause is what? Each and every section has something called as a subsection, and under each subsection there is something called as a clause. Sometimes there can be an independent clause also, like section 2. In section 2, each definition is independent. So you cannot call it section 2 subsection 1A. It is section 2 clause 1A to define agricultural income. Sir, are section numbers important for Income Tax Act? No. No need to remember anything. No problem. So now don't sit and study anything new. Exam is in November. Whatever you know, you just revise. So no need of anything new. But some terms you need to know. Subsection is part of the section. Then you would have heard dialogues called notification and circular. What is a notification? Notification is just like a law only. It is the subordinate law issued by whom? CBDT. It is published. Any government official notification, to make it legal or official, it has to be published in something called as official gazette. Right? So it is binding on every single person, binding on the income tax authorities, binding on SSC, everybody. The person whose income is assessed is called as SSC, as you know. Then it is binding on everyone. Circular. What does a circular do? So a circular gives a guideline and notification. If some doubts are there, doubts are clarified to circulars. Circular, does it bind on everybody? No, it binds only on the tax officers. It doesn't bind on anyone. And what does a proviso do? Proviso, want me to increase the temperature little? Feeling it increase means what? Obviously, so that it is less cold. Or you can probably space out and sit. Online fellows are sitting in banyan, cheddi, no tension for them. Yes. So Proviso what? Adds on to the subsection, or it gives an exception to the subsection. So whenever they use the word proviso, it either adds on or it gives a subsection. Anyway, guys, this is a very simple basics. Now coming, I'm doing in a very structured way, so it becomes easy for you. First of all, section number 4 talks about the dialogue tax. What do you mean by tax? Tax is levied on the income of a SSE. That's all. Tax is levied on the income of an SSE. Who's an SSE? Person. So basically, we need to figure out what is tax. We need to understand what is total income, and we need to understand who is a person. As simple as that. What is tax? Tax can be split into two. Wherever in the law they use rates in force, sometimes they use rates as per the act. Tax is always levied based on some tax rates. 20%, 10%, 5%, whatever. On the other hand, total income. Total income is given under section 2 clause 45, which says it should be in a manner calculated under section 5. So the computation will happen as per section number 5. Simple. Person is given in 2 clause 31. Person is given in 2 clause 31. Now what do you mean by rates in force? Whenever the lawmaker tells rates in force, it is rates as per the Finance Act. Every year Finance Act, Nirmala Aunty can keep changing the rates. For example, section 194D, it is the rates in force. She will say in the Bare Act that the TDS rate will be as per the rates in force, which means what? I have to see the Finance Act every time. The rates can keep changing every single year. On the other hand, if it is rate as per the Act means what? Rate as per the Act. Rate as per the Act means what? It is given in the income tax law itself. What is the rate? That is 194J, for example. They have only given, what have they given in 194J? That the rate will be 2% or 10%. So this is not rate as per the Act. What is this? Rate as per, sorry, this is not rate as per rates in force. This is the rate as per the Act. What is the rate as per the Act? 194J, 2% and 10%. That is what it is. Now, SSE will always be a person. Who is a person? That is defined in 2 clause 31. So guys, these are all the SSEs in our income tax law. First, individual. Individual means single person. You, me, single person. HUF, Hindu undivided family. There are two types of HUF. One is Mitakshara school of Hindu law, then the Dayabhaga school of Hindu law. Dayabhaga school of Hindu law is only in West Bengal and Assam. Mitakshara school of Indian law, Hindu law, is in rest of India, right? So there are many cases where they have told Jain is also HUF, but for ICAI purposes, Hindus will not include Muslims, Christians, Judaists, Parsis, Sikh and Jain. I again repeat, Sikh and Jain, there have been cases where there is a component of HUF there. But for our income tax purposes, for our examination purposes, let us assume there are only two, Mitakshara school of Hindu law and Dayabhaga law. Moving on guys, firm. Firm means what? Firm will be either a partnership firm or LLP. Generally in Indian Partnership Act, if I use the word firm, it is partnership firm. But in Income Tax Act, if I use the word firm, it will include both partnership firm and LLP. Company, we have Indian company, foreign company and domestic company. Then we have something called AOP and BOI. AOP is Association of Person, BOI is Body of Individuals. If 5-6 people, individuals come together, it will be called Body of Individuals. But if a company and an individual, company and a firm, one company, one LLP, one partnership firm, one individual, all of them come together, it will be called as Association of Persons, AOP. So AOP BOI taxation is also there, HUF taxation is also there. AOP BOI taxation more in depth you will see in final, not in inter. For inter, and then you have local authority like municipality, etc. Then artificial juridical person. You have university, Bangalore University, it's an artificial juridical person. Then any temple. Now Tirupati temple is run by a trust, so that is a different person. But thousands of years ago, or hundreds of years ago, when tax was still levied, temple did not have a trust. So even God is called as a artificial juridical person. So is there taxation on God? Yes. Nobody will escape Nirmala Aunty, right? Everyone has to pay tax, as simple as that. So artificial juridical person, university, temple, all that. For our CA inter, what all do we have? We have taxation of individual, little bit of taxation of firm, and definitely taxation of companies. Definitely we have, that is nothing but the chapter of PGBP, more to do with companies and what do you say, individuals. Now, all said and done, the taxation will be levied on these 5 heads of income. These heads of income are the most important thing. So salary, one by one. Salary is from section 11 to section 17, salary. Then we have house property, 22 to 27. Then we have PGBP, profit and gains of business or profession, that is 28 to 44 DB. Then we have capital gains, 45 to 55 capital A. And then we have income from other sources. Other sources will be 56 to 59. Again, I repeat, the section numbers are not at all important. It's okay if you don't remember, no problem. The first sections generally are called as a charging section because that is the charge of income tax happens in that particular section. Again, repeat, if you don't remember the section numbers, no one gives a damn. It's okay. Then some income is clubbed between people. So there's one more concept called clubbing of income where the father and mother both are working parents. In order to reduce their tax burden, what will they do? They will divert some income to their child. So I will invest somewhere and that money they'll say return should come to my child. Rather than return coming to me, return is coming to my child. So Nirmala aunty says cheating. That all this you cannot do. So what will she do? Club. So she will take the income of the child and the income of the parent and club. Which parent will they club it in? The parent who is earning the highest income, higher of the two. They will club. That's a different concept called clubbing. Then, if there is a loss this year, can I carry forward the next year? Yes. And next year there is a profit, but loss has already been carried forward. Can I set off? Yes. Next part of the area in income tax is set off and carry forward 70 to 78. I'm just giving you the gist of the entire syllabus. Then there are certain exemptions under section 10. It can be exemption to share of profit from partnership firm, share of profit from HUF, agricultural income. So all these exemptions are given where? In my this thing, exemption chapter, section number 10. Then we have deductions. Deductions are given in section 54, 24, chapter 6A, that is ATC, ATD and all those things. Very simple guys. Deductions are of two types. Intra-head deductions means within the head of income. For example, standard deduction in salary is there. Standard deduction in house property is there. These are intra-head means within the head. Intra-head deductions. And then chapter 6A, these are deductions from the GTI. GTI means what? Gross total income. GTI would be gross total income. So this is the next part of the story. Intra-head and inter-head. Anyway, so all these things are there. Taxation is taxed in the whole of the country. Now what is country? India. What do you mean by India? India is nothing but the entire geographical map. If you see, the entire thing is India. If you see even this part, that is the line of control is here and this is the Pakistan occupied Kashmir. So technically that is also actually India. And here these Chinese fellows have occupied part of this Aksai Chin. Even that is obviously India. So everything is India for sure. Then if I am playing a game, let's say that if you would have gone to Goa and would have done some water sports, there that fellow will be earning a lot of money through water sports. That guy who is organizing. Then when Nirmala aunty will go and tell pay tax, she will tell, that fellow will tell, no, it is not India. Why? It is not the landmass. It is water. Water also, is it India? Yes. How much? 12 nautical miles. 12 nautical miles. 12 nautical miles is the territorial waters of India. Now, Reliance, for example, will at almost 100 nautical mile, they are doing some digging, oil mining they are doing. Then they'll earn oil, they'll get oil and they will sell it, they'll make money. Nirmala madam will say pay tax. He will say no, India waters is how much? Only 12 nautical miles. So they say no, up to 200 nautical miles from the landmass. It is also called as exclusive economic zone. That is also very much part of India. Very much part of India. Beyond 200 only you have international waters. If anything happens in international waters, then the concept of double tax avoidance agreements will come. Treaties will come between two countries. All that you will learn in CA final, not for us. For us, for now we should understand 12 nautical miles and 200 nautical miles. Then down below, from Kanyakumari, if you jump, one more country will come, Sri Lanka. One small Gobi Manchuri piece like that, it is country, very nice country it is. Now there the problem is the water, nautical miles, from there also nautical miles, here also nautical miles merging. So what do you do for that then? Taxation of that. That's why very simple, there is a memorandum of understanding between the two countries. So wherever the country landmass is very, very close to other things, then it is what? Memorandum of understanding will be there. As simple as that. So guys, always taxation happens in the assessment year, but the payment of tax is for the previous year, But there are certain exceptions. What are those exceptions? In the following cases, assessment and taxation both will happen in the same year. Which are those cases? Point number 1, shipping business. I am a non-resident. I am from USA. I come to India for the very first time. I will deliver the goods or the passengers and I am going back. When I am going back, Nirmala aunty is waiting near at the port and she'll tell, hey, where? What about tax? So much you earned money. You delivered goods. You have earned 2 crore. Pay tax. That fellow will tell, sir, madam, mother promise next time I'll come. That mother promise, uncle promise, auntie promise, we don't know. So Nirmala madam will say, do you have any permanent establishment here? No. Do you have an agent here? No. So nobody you have. Today if you go, that's it. Then you will never come back. Please pay tax today only. So there are income tax offices across all the ports. Anybody who is coming non-resident, doesn't have agent, doesn't have permanent establishment, the law is different for them. What should they do? Immediately pay tax and leave. So assessment also happens in the same year. Payment of tax also same year. This is only your assessment year. Assessment year 22-23, previous year also 22-23. Pay tax and leave. Second person leaving India. Vijay Mallya is telling I'm leaving. Correct, he went to Kanakpura instead of art of living ashram, he is doing art of leaving. He wants to leave in India and go. So then when you are about to leave, what happens? You know that he will never come back. So you can take tax. This is purely based on the information that is received from the authorities. Everyone, if you are going abroad for some trip and all, I cannot say you are leaving India. Only those people who the assessing officer feels will never come back. They are the people who are called persons leaving India. Then anything which is formed for a particular purpose or an event. So let us say for 31st December 2023, we will organize a New Year's party. We form an AOP. The AOP is only for the New Year's party. New Year over. Party over. We have made a lot of money. We organized an entire party. We collected almost 40 lakh rupees, spent 30 lakh rupees, 10 lakh is our profit. Now, should I pay tax on it? Yes. But on which year? Because from tomorrow, there is no more business. Over. So, yes, there also, it will be taxed in the hands of AOP BY. Which year? Same year. Similarly, if I am transferring the property to avoid tax, if my business is discontinued, whatever the case may be, that year only they will tax. These are some of the areas where it will be taxed the same year. So, guys, we have something called as basic exemption limits and all those things. What are they? Ultimately, we have to come back to the tax rates now. Important, we have to come back to the tax rates. What are the tax rates? Very simple. For individual, HUF, AOP, BOI, etc., up to 2,50,000 rupees, nil. 2,50,000 to 5 lakh, 5%. These tax rates are very, very important. Why? Because from May 24 examination, there is something called as alternate taxation, alternate tax regime, which is still there for your syllabus also. But that alternate tax regime has become the main regime. So these tax rates will become optional from May 24 exam. So for November 23, this is the last time where all the questions will be solved based on the old tax regime. This is the old tax regime. New tax regime, there are more slab rates. From May 24 exam, swap. The new tax regime will become the default regime. And this regime is purely only if you want to, what do you say, choose it. And if you take the new tax regime, you will not get in most of the deductions under section 80. So which are the chapters which they can test more this time deductions under chapter 6A? Why? From next May 24 onwards, it will become optional. I'm not saying it is going to go. It will become optional. Right? So here, that's why I concentrate on these areas. So, are all anyway simple. Here coming to this, 2,50,000 to 5 lakh, 5 lakh to 10 lakh, and above 10 lakh, 30%. So basically up to 10 lakh, the tax will be around 1,12,500, because for this 2,50,000 to 5 lakh, I'll pay 12,500. 5 lakh to 10 lakh, for 5 lakh, 20% is 1 lakh. So 1,12,500 plus any amount more than 10 lakh will be how much? 30% will be taxed at the rate of 30%. Right? In case of resident individual, Tata Fellows, 60 years and above, but less than 80 years. At any time during the previous year, exemption limit is increased from 2.5 lakh to 3 lakh. That's all. Then we have 3 lakh to 5 lakh, 5%. So here 5% same, 5 lakh to 10 lakh, 20%, and more than 10 lakh, 30%. And next, resident individual, this is super Tata Fellow, 8 years and above, very senior citizen. At any time during the previous year, up to 5 lakh, there is a basic exemption limit. 5 to 10, 20, and about 10 lakh, 30%. So they can ask you, just to irritate you, they can ask you a question where you are a Mr. A who is 61-year-old fellow living in UK, earning 7 lakh rupees. Now what is the tax they'll ask you? What you will give? 2 lakh 50 basic exemption or 3 lakh? 2 lakh 50, because guys, it is only for resident individuals. That is most important to understand. It is only for resident individuals, not for anybody. Here also resident individuals, but this one is for all individuals. So this will also include what? Non-resident senior citizen, non-resident super senior citizen. Because it says individuals for both men and women who are not covered in these areas. Who are the ones not covered in these areas? Resident individual more than 60, resident individual more than 80. For all other intents and purposes, it is the same. So 5, 20, 30, then here nil, 20, 30. So basic exemption limit will all apply. One more question they can ask in the exam, that is, if somebody's birthday is on 1st April 1943. Somebody's birthday is 1st April 1943. Tell me, what is my financial year? Let me write down 1st April 1943. Or let me make it simple, 1963 will take. So when is his birthday? 1st April 2023. What is my financial year? 22-23. What is my assessment year? 23-24. My question is, he is touching 60th year. Is he touching in this financial year or the next financial year? Actually, he is touching in the next financial. If you actually think about it, birthday is on 1st April 23. So for the financial year 22-23, his basic exemption limit is actually 2,50,000 rupees only. But this issue went to court, went to the Supreme Court. Supreme Court said no. Whenever the birthday is on 1st April or anywhere, the birthday is considered to be 12 midnight in the preceding day. So for income tax purposes, when will he touch 60 years? On 31st March 23, he will touch 60 years. Will he get the benefit of the basic exemption limit increase? Yes. So if you are born on 1/4/1963, you are in the financial year 22-23, you will get the basic exemption limit. Similarly, if you are born on 1/4/43, you will become a super senior citizen on 31st March 23. That is the logic. This is based on a Supreme Court decision, right? This is one more thing they can ask you in the exam. Definitely. One more concept they can ask you. Yes. Then apart from that, guys, you have cess. What is that cess? Surcharge and cess. Surcharge, I will come to it. Cess is also there. What is cess? 4%. After you compute your tax, 1,12,000 plus whatever tax you compute, you have to add surcharge. If it increases the basic limit, we will see that. Then on that, you will have to add what? Cess. Of how much percentage? 4%. 4% cess has to be added. So this is one more point that you need to keep in mind. All this you leave. Yeah. So basically, there is a concept called surcharge. There is a concept called surcharge also. When will you have to pay surcharge? Here is the chart for that. Generally, you will have to pay surcharge if your income is crossing 50 lakhs. Up to 50 lakhs, there is generally no surcharge. Surcharge is nothing but super tax. This is tax for the super rich people, right? So tax on tax it is. Super tax it's called, right? So up to 50 lakhs, nil. Above 50 lakh but up to 1 crore, it is 10%. If your income. And above 1 crore up to 2 crore, 15%. Above 2 crore and up to 5 crore, 25%. Normal rates. Above 5 crore, it is 37%. So what is the maximum rate an individual has to pay? Let's say Virat Kohli or Mahendra Singh Dhoni. How much are they paying? First, they are paying 30% on their income anyway. You forget the slab rate and all, 30%. On that, they are paying what? 37% surcharge. On that, they are paying 4% cess. Deadly. So what is the actual rate? 37% of 30%. Then whatever comes on the whole amount, 4% extra. How much will it come up to? 42.744%. Deadly rate it is. One of the highest in the world, actually. Even if you take 50%, you take, but develop the country. Correct? Half will go towards politicians only. Right? So if you see this, my dear friends, is called as maximum marginal rate, MMR. So we have to remember this concept of MMR, maximum marginal rate. The maximum rate paid by an individual in India is 42.744%. Like that, MMR rates are different for different people. So that part is given in my notes here anyway. 744 it should be. So for individual, HUF, AOP, you can use whatever notes you want, doesn't matter. 42.744%. Cooperative society, 34.944%, like that. If I want to sell my book, I can tell you buy this book. I am telling you now, do not change your book. If you buy my book, you will fail. I'm not joking. 1 month to go for the exam, do not change your book. Online people, 1 month to go for the exam, do not change your book. If you are studying the institute material, study institute material. Right? If you are studying my material, blindly follow my material. If you are studying whichever academy you studied material, stick to that material. Do not change your book at any cost. You cannot change the book. Okay? Yes. 42.744%. Online people, are you alive? Yes or no? Are you slept off? Afternoon, after lunch? Lunch is not yet done. Yes. So, cooperative society, it is 34.944%. Right? Then, firm including LLP also 34.944%. And domestic company, it is 29.12%. And foreign company, 43.68. All that we'll see. This you have to remember the rates. You need to remember these rates. Because somewhere they can ask you what is the maximum rate. A simple MCQ question can come. Guys, MCQ, do not ignore. These are all important. So what are the maximum rates that they can that you have to pay, like that they can ask you? These are the maximum rates. Please follow whatever material you already have been using. Right? So do not change your material at any cost. Whichever academy, I don't care, wherever you are, but please don't change material 1 month to go for the exam. Dangerous it is. Because you are already used to studying one material, so don't change it. Yes, so that is what it is. All this we did. Now, surcharge. I am talking about surcharge. Now, what happened was, see, these rates were there, guys. 10%, 15%, 25, 37, all these rates were there. All this were added, few years ago. Few years ago, they were added. Now, the problem was, I am not earning any other income. And dividend income, dividend earlier was charged by whom? I'll give you logic wherever possible also. Dividend was dividend tax was paid by companies or individuals earlier. Companies used to pay dividend tax. For individuals, it used to be exempt. So 2-3 years ago, what they did, they said company will no longer pay tax. So there was a concept of DDT. Dividend distribution tax will not be paid by the company. Who will pay? Shareholders will pay, they said. Now think about it. My only job is investment. I'm only investing. I don't have any other income. And for me, dividend used to be exempt. Now suddenly you are taxing dividend. And because that dividend income has exceeded 1 crore, 2 crore, or let's say exceeded 5 crore also, I'm only investing in companies. Unfortunately, I had to pay surcharge of 37%. And if I'm buying, selling shares, just my income, because of that, I had to pay surcharge of 37, 25, etc. They all went to Nirmala aunty and started crying. Like, what is this nonsense? First of all, I did not have to pay tax on dividend. Now you made me pay tax on dividend. On top of that, because it's going beyond that limit, now you are charging me, what, 37%, 25%, all that. That's why very important change came. They said, if you are earning income from dividend, Income from 111A. What is 111A? Short term capital gain. 112A. 112 is also added. Basically all four. If you are earning anything with respect to buying and selling of shares, short term, long term. If you are earning dividend, the maximum surcharge I am going to charge will be 15%. That's all. I will not go more than that. Maximum is 15%. So that is what they told. 111A, 112A dividend. So just to revise, if I sell a capital asset, there will be a capital gain. It can be short term or it can be long term. Tax for short term capital gain under triple 1A is 15%. Tax, you know that. And long term capital gain, it is 10%. Under 112 also, some are exempt, some taxable, all those things. Dividend is taxed at the normal rates. Dividend is taxed at the normal rates because for a company there is no tax. But guys, now they have told, do not worry. And 112 long term capital gain, there is a basic exemption limit of 1 lakh. Anything more than 1 lakh, only 10% tax. Anyway, now they told, I don't care however much you earn money, I am not going to make the surcharge more than 15%, is what the government told. Like, don't worry, I will not burden you. I understand that you are extra burdened now, but I will not going to burden you. 15% is the overall thing. So based on the surcharge, they can give you various questions, right? They can ask you various questions, but there are certain rules with respect to surcharge. What are the rules? If you see this, these are the rules basically. If the total income, including specified income, does not exceed 50 lakh rupees, all income put together, it will never exceed 50 lakhs. Chaprasi fellows like all of us, how much will it be? Nil. Tax only, sometimes no need to pay. What? Surcharge. Correct? So nil. Both are nil. Second, total income including specified. What is specified income here? 111A, 112A, 112 dividend. Total income including specified income is exceeding 50 lakh but does not exceed 1 CR. Surcharge on specified income is 10%, other income is also 10%. Next, total income including specified income exceeds 1 crore but does not exceed 2 crore. Then also it's okay. 15. But all inclusive if it goes beyond 2. All inclusive if it goes beyond 2. That is this note. Total income exceeds 2 crore. Well, total income including everything. Then also Nirmala madam says, I already told you, don't cry. Maximum surcharge is 15%. But if I exclude the specified income, I am not even considering your dividend income, capital income. Like that only you are minting money. How much you are minting? More than 2 crore, less than 5 crore. Then they'll say, for that income I promised you 15%, but for other income, please pay 25%. Because your income excluding specified income is how much? More than 2 crore, less than 5 crore. Right? So 25%. Next, total income excluding. So you don't even have dividend income. You have dividend income that I'll ignore. You have some capital gain income. But let's say Virat Kohli, Mahendra Singh Dhoni, apart from these 3 items only are earning more than 5 crore. Was for you, nothing can be done. Please pay super tax. How much? 37%. 37%. So just an example. You see, check out this example. Ram, this is specified income, this is other income. Specified income 13 lakhs, other income 65 lakhs, overall income 78 lakhs. Is it going beyond 50? Yes. Less than 1 crore? Yes. So on both the income 10%. His specified income is some 30 lakhs, other income is 1.7 crore. Income excluding, all including how much? Is less than 2 crore. All including is less than 2 crore. Since it's less than 2 crore, more than 1 crore, less than 2 crore, both incomes you have to pay 15%. Third example, your specified income is just some 7 lakhs. Other income you see 3 crore. You are like some IPL player. So for this, Nirmala madam will tell, okay, 15%. But this, boss, you are earning more. So you play 25%. Here though you are everything. That you are earning 7.5 crores from where? Specified income. 7.75 crores and 3 lakh. From 7.8 crores you are earning approx. 7.78. So they say, boss, you are earning so much, but I already promised you, maximum you will pay is only 15%. But let's see your other income. Other income has gone beyond 5 crores. So for that other income, kindly pay 37%. Like that. Very simple. In this case, again you see, other income is less than 1 crore, but this income is 6.42 crores. I told you, I promised you that for this it will only be 15. But since the total income, everything is exceeding 2 crore, I told you maximum surcharge will never cross 15%. These are some of the examples to make you understand. Right? Yes. Health and education says always 4%. So this is the entire computation that you have to do. Total income will be there. Then you have to do tax on total income. Then there is something called rebate under 87 capital A. What is this rebate? Up to how much amount? Up to 5 lakh tax. Tax on 5 lakh, you will not have to pay any tax. What is the tax on 5 lakh? 12,500. The rebate is on 12,500. This is important because in the next Finance Act, they have changed it. Which means this 5 lakh concept will come last time when? November 23 exam. I am not going to tell you what the change is and all. I am just going to tell you what has changed so that you will know this is the last time. Even this entire thing, this basic exemption limit, all these things, last time it can come only in November 23. I am not saying it is removed. It has become an option. Which means from May 24 onwards, the only calculation we are going to do is as per the alternate tax regime, not as per this regime. It will be an alternate tax regime. In alternate tax regime, you will not get any deductions also. So this time they can ask you more questions on deductions under chapter 6A. Then this thing and rebate they can ask you, because rebate, it has become something else later that you leave. But this rebate is, rebate, they have changed it for this thing, that alternate tax regime. So that will become the correct rebate. For this rebate is different. For company surcharge and all is different. Right. So for everything you need to round off to the nearest multiple of 10 rupees. Total income also you have to round off. Amount payable, refund, everything you have to round off. Then for local authorities and cooperative societies, these are different rates are there. For companies, these are company tax rates again. For firms and LLPs. For firms and LLPs, 30%. For firms and LLP, it is 30%. This will make it 2021. 1 second. For firms and LLPs, how much? 30%. Any firm, LLP, 1 rupee, 10 rupees, 100 rupees, 1 crore, 2 crore, always 30%. And surcharge up to 1 crore nil. More than 1 crore up to 10 crore, 12%. More than 10 crore, 12%. For others whose were total turnover or gross receipts during the previous year 2021. So guys, it was 1920, but now for our exam it's been changed to what? Previous year 2021. For the previous year 2021, if your income is less than, total turnover is less than 400 crore. For the previous year 2021, 1st April 2022, 31st March 2021. If your turnover, this is for which previous year I am talking about? Financial year what? This is Finance Act 22, which means what? 1st April 21 to 31st March 22. So I am standing on 1st April 21. Where, what should I see the turnover? Immediately previous year. So what is the turnover? If it does not exceed 400 crore, then special rate of tax for you 25%. If your income has crossed 400 crore, then normal 30%. Right? This is again for ease of doing business and to support more and more people to open companies. There is a reduced taxation which was introduced in some 1718 only by Arun Jaitley. And made very popular by Nirmala Sitharaman. Every year she'll ensure that she tells this. So initially it was only 1920, then they extended it later also. So they kept on extending. So it was idea was mooted by Arun Jaitley, but then it was started, got more prominence due to her. So it's a relaxed rate of taxation standing on 1st April 22. I need to see 31st March, or standing on 1st April 2021, I should see. 1st April 22, 31st March 21. So our Finance Act is 22-23. That is from 1st April 22. So I should see previous to previous year. Sorry, that is 2021 I should see. It makes it easy. Right? Previous to previous year. And then domestic company, other cases, 30%. Here she has reduced the surcharge also. Imagine surcharge is high for individuals only. For companies, it's nothing. 1 crore to 10 crore, 7%. More than 10 crore, 12%. Compare it with individuals, 15, 25, 37. So it's better to start company than do business individually, honestly. Anyway, but then for individuals, they have given some extra benefits in the form of presumptive taxation. So for individuals also, there are benefits, nothing to worry. The only people who are real bakras are salaried fellows. For everywhere, taxation for them, unfortunately. Right? So domestic company, other than the above, 30%. Then here 7, 12, same. For foreign company, tax rate she has increased to 40%. Since the tax rate is high, surcharge benefit she has given. 1 crore to 10 crore, 2%. More than 10 crore, 5%. More than 10 crore, 5%. So this is only for those people who are, foreign companies. And rebate, I told you, up to 5 lakh, there is no tax for you. So if your income is less than 5 lakh rupees or exactly equal to 5 lakh rupees, up to the amount of 12,500, there is a rebate. Definitely, you will not have to pay any tax. So next important concept is the concept of marginal relief. Marginal relief. So for individuals up to 50 lakh, there is no tax. No tax means no surcharge. 50,000, 1 rupee if I earn, surcharge will come. So let us say one fellow Indian, he is earning exactly 50 lakh tax, 50 lakh income. What will be his taxation? Up to 10 lakh, it is 1 lakh 12,500. On the excess, 40 lakh rupees, 30% he'll have to pay. So what is his taxation? 13 lakh 12,500 before adding all that, before adding your cess that you leave. One more fellow, Ambi, is just earning 50 lakh 1,000 extra. He's just earning 1,000 extra. What will be his taxation? Up to 10 lakhs, it is just 1 lakh 12,500. But for 40 lakh 1,000 into 30%, it will be 12 lakh 3,000. Overall, 13 lakh 12,800 will be earning. Now, because he is earning more than 50 lakh, he has to pay surcharge of how much? 10%. So he will have to pay 14 lakh 4480 rupees. What is the difference? Some 1 lakh difference he has to pay. He has to pay 1 lakh 30,000, not 30,000, 1 lakh around 31,000 approx. Difference between the two he has to pay for an increase of 1,000. Doesn't make any sense. He is paying 1 lakh 31,580 rupees or something extra unnecessarily. Ambi will go to Nirmala madam and say, Madam, that 1,000 you only keep, I don't want. I will pay 1 lakh 13 lakh 12,500 I will pay, madam, for sure. Plus extra 1,000 you only keep. I am giving you gift. Take it. Why the hell should I pay 14 lakh 4480? I don't want that 1,000 rupees. I am happy with 50 lakhs. You only keep that 1,000. So I will pay 13 lakh 12,500, madam, and I will pay 1,000 rupees extra. You only keep. On that surcharge, this thing also I will pay. Says you keep that also, no problem. I will not pay 1 rupee more. Made sense. This is the concept of marginal relief. This is the concept of marginal relief. So marginal relief is the basically because of the surcharge limits increasing. Just marginally if you earn more, unfortunately you are paying something which is not proportional to the increase only. If this was 52 lakh, then it would have made sense. because if tax on 52 lakh would be more than this thing. But now the tax that I am paying only is more, way higher than this. Hence, marginal relief concept has come. So, what is the marginal relief now? Very simple. 13,12,500 plus this 1,000 rupees I'll add. Donation. Total 13,13,500 I'll pay. I was supposed to pay 14,44,080, but I am actually now paying 13,13,500. The difference is called as marginal relief. 1,30,580 marginal relief. So to compute marginal relief, there is a formula. No need to mug up at all. First is you have to compute the tax on total income as usual. In our example, it was that, what is that? This one, 14,44,080. 14,44,080 it was. Then tax on surcharge limit just before the slab rate. That is whatever 50 lakh fellow would have paid. 13,12,500. 13,12,500. Then the restricted amount. That is step number 2 plus net total income minus surcharge limit in step number 1. What is that extra amount? 1,000 rupees extra. So I am paying 13,12,500 plus that extra 1,000 you only keep. I don't want. Then tax payable shall be what? Step number 1 or step number 3, whichever is lower. It is better for me to pay 13,13,500 than pay 14,44,080. So I will pay this much only. I will pay 13,13,500. I have no problem. So tax payable will be 13,13,500 plus cess of 4%. That's the tax payable. What is the marginal relief? Obviously, step number 1 minus step number 3. Step number 1 is 14,44,080 rupees minus 13,13,500. 13,13,500 because that is the amount that I am paying. So that benefit that you have received is called as marginal relief. The benefit you have received is called marginal relief. Understood, guys? Online people, are you there? Yes. So this is what it is. Simple marginal relief. And what is income and all that you leave? Fine. So this is the concept of marginal relief, which is again important for the examination point of view. So in any law, if there is a citation like this, who has filed the case will come first. Against whom? Who is the respondent or defendant will come second. So here if it is Saravanan Stores, it is called as the plaintiff or the petitioner, and the other person is called the respondent or the defendant. And then this will be where that entire thing is recorded. And which court? MAD, Madras, Karnataka, KAR, like that it will be. Generally, why isn't it Tamil Nadu High Court? It was always called as Madras High Court. Then why isn't it called Bangalore High Court? It's always called Karnataka High Court. Then which year? And then they will write AIR. AIR means All India Report, which means in that book this case is recorded. This is the reference number. Volume number, page number, everything will be reference here. That's it. So this is the citation. So this is predominantly the entire basics of the scene. Very simple. So with these basics in mind, let us quickly go through only the residential status, which is important, and then move on to house property, PGBP and all those things. Basically, at least if we finish all the heads of income, we will be in a very good position to understand, because ultimately heads of income only will give you fetch maximum marks. And TDS also. TDS is also very important. Students generally ignore TDS portion, thinking it's who will study that and all that. That only they'll ask in the exam. Right. So let's quickly move into the residential status area, so that also will be quickly revised. Please, the residential status portion, because there have been changes couple of years ago, and unfortunately people are making a mess of understanding the entire thing. Yes, quickly we'll do that. Residential status, all the basics, it all comes under basics only. Residential status, very simple. Right. So residential status. Let's talk about individual first, and firm, AOP, company, etc. For individual HF it is different. For firm, AOP, local authority it is different. Right. For individual it is different. For firm, AOP, local authority it is different. So for individual, what it will be? It is either called resident or non-resident. For firm, AOP, local authority, BOI, company also, it is either resident or non-resident. For a resident, very simple, global income is taxable. Wherever that fellow is earning money, taxable. Virat Kohli earns Man of the Series award in Australia, taxable in India. He earns Man of the Match award in, in UAE, taxable in India. For a resident, wherever he earns money, taxable in India. Global income. For non-resident, however, only the money that he earns in India will be taxable. Money that he is earning in India only will be taxable for a non-resident. For a non-resident. Only other income is, Indian income is taxable. That's okay. For individual HUF, now we have resident, non-resident. But guys, for resident, there are two concepts. What is that? Resident but ordinary resident. And resident but not ordinary resident. ROR or NOR. Won't the foreign country tax also paid? Yes, that he will pay in that country. Virat Kohli will pay, let's say, made an advertisement for a Australian channel. So will it be taxed in Australia also? Yes. Will it be taxed in India also? Yes. That is why we have treaties, double tax avoidance agreements. If treaties will be there, based on the treaties you have to do the tax. That you will learn in CA final. CA enter, that level not there. There is the basic stuff. This is the final chart. Sources of income and where it is taxed. Sources. Basically, we have for individuals three things: ROR, RNOR, non-resident. So what is ROR, what is RNOR, all that we'll see, don't worry. But just the taxation aspect. Income received or deemed to be received in India. Whether you are a resident, not a resident, non-resident, for everybody it is taxed. Correct. Matthew Hayden comes to India and does a commentary session for IPL. He will earn money in India. Is a non-resident? Yes. Is the income received in India? Yes. Taxable in India or not? 100% yes. Sir, but he is an Australian citizen. Will he pay tax there also in Australia? Yes. That's why treaty will come. But I don't care about whether it is taxable in Australia. I am only concerned about whether taxable in India. Very much taxable in India. Right? You guys have brought something to eat, you can eat. Otherwise, bring something from tomorrow. You can eat, you can drink. Drink means water. Don't bring old monk, chips, all that. Okay, you can come and eat. No problem. Be comfortable. Come in comfortable clothing. Okay, don't wear all formals and all and come. Your wish. If you are comfortable in formals, wear that. No problem. But I am saying, don't just be comfortable. Don't, have that notion that it should be all strict. Whatever you are comfortable, you wear. These online fellows, they'll be sitting in shorts like this, all that, chilled out. Yes, so income received or deemed to be received in India, everything is taxed. ROR, RNOR, non-resident. Next, income accrued or arising in India or deemed to accrue or arise in India. Correct? Accrued or arising in India or deemed to accrue or arising in India. I am sitting in UAE. But I have a, rental, I have a building in India, rent that fellow is paying. Where is it accruing in India? Where is it taxed? Obviously in India, for everybody. For everybody. Income accrued or arising or received outside India. So for the people living in USA, let's say I have a business where I will sell all masalas. Those fellows won't get any masalas there. So ready-made masalas I will sell. There is actually a company called Patel's in there. Patel's is a provision store, very famous store. It started off as nothing. It has become very, very lucrative. Lot of our fellows are staying there. And many of them are working professionals. They don't have time to cook Indian food. And especially masalas and all, if it's available, good. So best part is sitting in Bangalore. I am only exporting masalas. Where? I am not even selling it in India. That's the best part. Because in India, nobody will buy. Our parents will cook superbly. So now what to do? I will only export outside. So where is the income arising or accruing? All outside India. But where is the head office? Bangalore. Business is controlled from India. Or profession is set up in India. For ROR, RNOR, taxable in India. But the best part is, For non-resident, it is not taxable in India. So, your sister who is living in USA, assume, she's lived there for 20 years. Is she a resident, non-resident? Non-resident. She comes to India and she tells, I have no masalas there and I can do a solid business there. One idea she'll make. She'll tell you, you're the brother, sister. Hey, you do control everything here, you send it to me there. So she is minting money there by importing everything from her home in India. And she's making 20 lakhs, 30 lakhs, 40 lakhs. Taxable or not taxable? Not taxable because she's a non-resident. Now this was a huge problem. Nirmala aunty says this cannot happen. I need to do something about it. That's why amendment came. We will see that amendment. But actually this was not taxable. So now she said, no, let me make an amendment whereby this will become taxable. We will see that. Now only we will see. This is all important for November 23 exam. Yes, income received outside India. This is what? Matthew Hayden is doing some commentary for Australian channel. There he is receiving money there. Obviously not taxable. This is all income receiving outside India. Virat Kohli, everything is taxable. Virat Kohli earning Man of the Series award in Australia, taxable unfortunately. Matthew Hayden, who is a non-resident, he is earning money in Australia, not taxable in India. Some fellow who is a resident but not ordinary resident, moves around in and out of India, is actually resident but not ordinary resident. For him also is earning something outside India, not taxable. So for all these things it is not taxable, right? But the only problem for me was this one. My sister who's lived all her life in USA, went there to study. Now she's coming to India, setting up business in India, but all operations outside India and making a lot of money. And it's not taxable. So now that portion I need to change, right? So let's see that, what change and all we'll see. But first of all, before going, this is the basics. What the hell is resident? Who is a non-resident? Who is resident, ordinary resident, that we have to see. Next part of the story is that. Lot of places, too many confusing points are there. I have made it as simple as possible. First of all, resident. For you to be a resident, you have to follow one of the two basic conditions. Right? You have to follow either condition number 1 or condition number 2. Not both. Mind you, one of the two. What is basic condition number 1? You should stay in India for minimum 182 days in the previous year. What is my previous year? 22-23. Right? You should stay in India for minimum 182 days. Now, if that is not possible, let us say I have not stayed in India for minimum 182 days. There is another condition. You should stay in India for at least 60 days in the previous year, 22-23. And you should have lived in India, stayed in India for 365 days or more in the last 4 years. Last 4 years means what? Before 22-23. That is 21-22, 20-21, 19-20, 18-19. I repeat, if you want to be called as a resident, you should follow both or only one. One of the two. If you don't follow both, you are a non-resident. Simple, no questions asked. One of the two. Either last year you should stay for 182 days. Or last year you should have stayed for minimum 60 days. Before that, you should have stayed for 365 days or more. Right? So, we are all now CA students. 180 days means 370 days in a year also will stay here only. 5 days extra will add GST. Right? So, we are staying in India only. Where we will go? We will not go out of Bangalore only. Where? India. Right? So, yes, that is, we are residents. Let's say you become a chartered accountant. You join some company here. They have sent you for a 7-month project outside India. You are working in India only. 7-month, 8-month project outside India, they have sent you. Or let's say 11-month project, almost 1 year you are staying outside. You are working in India only for that project you have gone. You have not gone outside to work. You are working in Indian company only. In India only. For a project they have sent you for 11 months. Now for you, now tell me. 22-23, you stayed only for 30 days in my example. But are you still a resident? Yes. Why? Before that, you are dying here on, doing article shape, CA and all those things. So all these 4 years, You are in India only. 365 days or more in the last 4 years put together. Definitely you were there for 365 into 4 you were, not even 365 out of 4. 365 into 4 you are in India only. So yes, are you a resident? Yes. First one, CA students, resident. Second one, after CA, you're working in an Indian company but they have sent you for a project. That's one thing. Now, this second condition, there were a lot of problems because if you are a non-resident, then you will not be taxed only, no? Think about it. What if my example was you are working in an Indian company but you have gone abroad to do some work for this company? Reverse case. Now you want to go abroad only to study or to work there. Or you are a part of an Indian ship. You have gone abroad. Ship always keeps traveling. Almost 11-12 months you are outside India. If I make you non-resident, Indian Nirmala madam will lose tax. So for them, she made a change. See here. Exception number 1, exception number 2. So if you are an Indian citizen, if you have gone in search of employment outside India, means you have gone outside India for what? To search for employment, you have got employment opportunities, you are likely not to come back again. That's the mindset of why this law was framed. You are probably not going to come back, or you will come back after 4-5 years. This is not like some small project you have gone. You have gone permanently almost. You have shifted basically. Or you are a crew of an Indian ship. You are part of the crew of an Indian ship. Then they say the second condition you should ignore completely. You will be a resident only if you stay in India for more than 182 days in the previous year. The 60 days now I will not give you. It should be 182 days. Only then you are resident. This is exception number 1. Right? This is the correct thing, guys. Do not read anything. This residential status, many teachers also unfortunately teach all the wrong stuff. Especially there is a concept called deemed resident. Whatever they feel like they have taught. Unfortunately, it's wrong. Just follow this. It's 100% right. Right? So it is, we'll come to deemed resident. We still haven't discussed this extra point which amendment came. If you know why it came, you'll never forget. There's nothing to mug up. Right? So it is this, again I repeat, basic condition, stay in India more than 180 days or 60 and 365. That 60, 365 point will not come for whom? Those who are Indian citizens but who have gone abroad for employment, or they are gone outside as a part of a crew of an Indian ship. Then first condition will apply. Second condition will not apply only. Which means for them 1 out of the 2 conditions and all will not come. They have to follow 1 condition. Which condition? 182 days before in the previous year. Second one is interesting. This is your sister case. This is your sister case. Now, just because you are living abroad, does it mean you become a UK citizen? No. You are living in UK for 5 years. Does it make you UK citizen? No. But are you eligible to claim citizenship? Yes, you are eligible. Let's say your sister has gone there to study. She is working there. She is some 5-6 years. She is there only. She is definitely non-resident. But she is not a UK citizen yet. She is an Indian citizen. So your sister used to come to India and do all those things and then go out and then make money. That's why to plug that loophole, this amendment came in Finance Act 2020. Based on this, they have not tested so much in our exams because it's quite recent. What was the amendment? If you are an Indian citizen or a person of Indian origin, who's a person of Indian origin? You may be a foreign citizen, but your parents or grandparents were part of, were citizens of India, undivided India and all those things. Sundar Pichai, for example, is a foreign citizen. Sundar Pichai is a citizen of US. But is he a person of Indian origin? Yes. Kamala Harris is a citizen of US, Vice President of USA. But is she a person of Indian origin? Yes. Satya Nadella is a citizen of US. But is he a person of Indian origin? Yes. Your sister, she is an Indian citizen. Your sister has taken up citizenship of UK. She has surrendered Indian citizenship. Is she a person of Indian origin? Yes. Because once upon a time she was an Indian citizen, or her parents or are Indian citizens. Right? Very, very simple. What about this? Your sister has gone abroad. Your sister has married a foreigner. That foreigner fellow, is he a person of Indian origin? The sister has gone abroad, settled there. He's married a foreigner. She's gonna settle there only, obviously. She's not gonna come back. That foreigner fellow, your brother-in-law, is he an Indian citizen? Is he a person of Indian origin? Yes. If you see the definition of person of Indian origin, in FEMA it is given. What is it? Spouse of an Indian citizen is also person of Indian origin. Right? It doesn't even make sense. But I'll tell you why it came. It came because it's true story. I'm not here to do any political discussion because you'll never forget it. Example, not example, true story. There's a guy called Rajiv. Rajiv went to Italy. True story. In Italy, he fell in love with a lady called Sonia. And he married Sonia. Correct? Then he came back to India. Foreigners cannot buy assets in India. No, but person of Indian origin can buy assets in India. How to make it? Change the definition. So if I say spouse of Indian citizen is a person of Indian origin, an Italian person called Sonia will now become Indian citizen. Not Indian citizen, person of Indian origin. Initially I am talking about that time when it happened, when the amendment came. So now a spouse of an Indian citizen is a person of Indian origin. And a person of Indian origin can buy assets in India. That's why it was changed that time. As Congress, BJP, all useless fellows only. Some are good, some are bad. They keep changing the law according to what they want. When I say Congress, BJP, I meant politicians. They keep changing the law according to what they want. Right? So now you will never forget. Person of Indian, that's why it came actually. I'm not even joking. Person of Indian origin means any person whose parents or grandparents were citizens of India or spouse of an Indian citizen is a person of Indian origin. Imagine. So now tell me, is Priyanka Chopra, is she a person of Indian origin or Indian citizen? She is no longer Indian citizen. She is now a citizen of USA. But is she a person of Indian origin? Yes. Why? She was an Indian citizen once upon a time. Nick Jonas, husband, is he a person of Indian origin? Yes. Right? Person of an Indian origin or Indian citizen or who is not resident in India basically. Your sister only will take now. Let's not go to Sonia and all that. Your sister. She has gone abroad. Now she is a non-resident. She's come to India on a visit. And she's telling you, I am not able to eat there only properly. So you will tell, see this masalas and all I have started. She'll become very happy. Now she'll tell, okay, if you sell now, for you it will be taxable. I will sell. So she comes a visit into India and she goes out. Right? So then there she does all these things. Business. Now will it be taxed or not? So first of all guys, first amendment what came was, he should stay in India for more than or equal to 180 days in the previous year. A1. That is the normal condition will come. That's no problem. A2 to be ignored. At point number A2 to be ignored. That you leave. A2 to be ignored. So she stay in India for how much? More than or equal to 180 days in the previous year. Only then she will be called as Indian citizen. Or rather resident. Sorry, not Indian citizen, resident. But using this mechanism, she was still cheating only, no? She'll stay in India for how long? 120 days, 130 days, like that she'll stay. And she'll go away because her second condition is not there only. First condition should be 182 days. This amendment also, it created a problem. Why? Because she was still cheating. Your sister can stay in India for 120 days, 130 days, 140 days. She can still go outside and still do your masala business outside India and still earn money and not pay tax in India. And in US also she was not declaring. This was happening many cases, not one, not two. So one more amendment came. What was that amendment? This one. Indian citizen or person of Indian origin, your sister, comes to India for what? For a visit. That's all. If her net total income other than income from foreign source, net taxable income other than income from foreign source. Means she is working abroad, I will not touch that income. What is this income? Indian income. That masala business. Isn't it accruing this part? See, I told you this part is not taxable, no? Especially third part. Income accrued or arising or received outside India from a business controlled from India. She was a non-resident. You think about it. She was a non-resident. Right? Non-resident. She was cheating. Not allowed. What will I do? See here. Now, again, I'll come back. Yes. This is the easiest way to understand logically. Don't mug it up, guys. People mug this chapter up, unfortunately. That's why I want to start off with this only. Right. Indian citizen or person of Indian origin. Your sister comes to India on a visit first time. Means she keeps coming every year. She knows that I will be resident only if I stay more than 180 days. She'll not stay 180 days. What she'll do? Some 80, 100, 130, 140, 150 days she'll stay. Properly set up business here. Go abroad. Start selling there properly. Again come back next year. 150 days you properly. Basically she's running a business in India but showing herself as non-resident. Because of that stupid rule of 180 days. Basically she was breaking this benefit given. In this benefit that second condition is not there only, no. He was breaking that second condition by staying exactly 150 days, 160 days and then running away. And minting money there. Setting up business here, mint money there. Many people are doing this. Many of my friends' parents only do this. They used to do, not joking. One of my dad's friends has a toy business. He never sells one toy also in India. Everything he sells outside, soft toys. He sells outside India in these zoos. All the zoos of the world, especially USA, he sells those soft toys. Animal toys, tiger toy, then leopard toy. They'll buy there. The unit is in Kerala. He stays in India for 160, 170 days. Then he goes out there. Then for half year production, half year selling. 1 rupee also is not paying tax. He sells it in Dubai. Dubai tax rate is 5%. India tax rate is 30%. Oh, what is better? 5%. I'll sell there. I'll pay tax there. India, no tax. Cheating. That's why this section came actually. Now you see, now your sister only will take. Your sister. Her net taxable income other than income from foreign source. Foreign source I am not touching. That's her income. Why will I touch foreign source? That I am not touching. What I am touching? Her Indian money. That masala business, if she is earning less than 15 lakh rupees, Nirmala madam says, okay, keep it. I don't care. Less than 15 lakhs if you are earning, you keep it. I don't care. She says, exception 2 will still apply. That is, A2 shall be ignored. Means second basic condition you should ignore. Normal provision like this only. Normal. No change. Like this, whatever we saw here, no change. Same. You are an Indian citizen, non-resident, comes to India on a visit. What will be your residential status? Only if you stay for 182 days. Because you are earning some peanuts. What is that peanut? 15 lakhs. I will not touch. Don't worry. I will not touch. Where she observed people were minting 20 lakhs, 25 lakhs, 30 lakhs, 1 crore, 2 crore, paying some peanut amount, 5%, 6% other countries. He said, those people I will catch. That is why if your NTI in foreign, other than foreign income it is, your income from India, it is more than 15 lakh rupees. What was that second condition? 60 days and 365 days. That I will bring back for you. For your sister who is cheating by staying 130, 140, 150 days and properly setting up business here, then going abroad and selling everything. For her, I will change the law. I will bring back that 60 days in previous year and 365 days in the last 4 preceding years, because every year I am doing the same thing. But one change I will do. At 60 days, I will make it 120 days. At 60 days, I will make it 120 days. So, your sister, basically these were targeting those businessmen who were using residential status concept to come to India. They were actually staying in UAE only, but they are coming to India, setting up business here properly, staying for 130, 140, 150 days, neatly staying here, making business here, taking all the goods outside India, selling there. So for them, more than or equal to 120 days in previous year and 365 days in the last 4 preceding years. 365 days means per year how much? Some 60-70 days. Definitely they were cheating. So such people, Nirmala madam said, you were actually non-resident, but now I will call you resident but not ordinary resident. You have to pay tax. Pay tax now. The last column was cross. That cross has become tick only for these people. Right? So it is 120 days. Generally people mug this up. Don't mug it up. It's very easy, very logical. If you understand the logic, you will not forget at all. Simply people mug up 180 days, that is 365 days, mugging. Right? So it is what? 120 days in the previous year. So that 60 has become 120. That was one more change. So 2 changes she brought in. She brought in that second exception to her sister's case. And that 60 she made it of 120. And she said she is no longer non-resident. She is what? Resident but not ordinary resident. Now what is this resident, ordinary resident, resident, not ordinary resident? Very simple. If you are already a resident, you have to follow 2. First of all, you should already be a resident. Correct? Who is a resident? One of the 2 basic conditions. If you are already established as a resident, if you are a non-resident means what? Of the 2 conditions, not even one condition you will follow. Then you are a non-resident. Chapter close. But if you are a resident, you should follow at least one basic condition. That is A1 or A2. For some cases, A2 will not apply, only A1. After you become a resident, you are resident but ordinary resident if you follow both additional conditions. ROR means both additional conditions. RNOR means what? Only one additional condition. If you follow one or if you follow none, you are a RNOR. But if you follow both, you are a ROR. If you follow both, you are ROR. If you follow one or if you follow none, you are RNOR. What are those additional conditions? You should be a resident in India for 2 previous years or more in the last 10 previous years. So Finance Act, our financial year is 22-23. You leave that. Before that you go 10 years. In that 10 years, you should fulfill the residential criteria for 2 out of 10. That is one condition. And apart from that, you should stay in India how much? For at least 730 days or more in the last 7 previous years. 730 days in 7 years, 2 previous years or more in the last 10 previous years. Be a resident. I again repeat, for residential status, you should follow at least one basic condition. And after you are called as a resident, are you an ROR or RNOR? To follow that, you have to follow both additional conditions. Both additional conditions, ROR. Not even one additional condition, or I have only followed one additional condition, not both. Then you are RNOR. Now, I told you about this, your sister's example. For your sister, it was ideally, you are an Indian citizen, or a person of Indian origin, you are a non-resident, but you come to India on a visit, and you are staying in India for more than or equal to 180 days, only that one condition had to follow. To break this law, what were you doing? You are staying for 130, 140, 150, 160 days, practically set up your full business here, go abroad, sell, and pay tax at a lesser rate. Again, next year come, do the same thing, 140, 150 days you stay, go. To curb this from happening, they inserted the second condition here. What is the second condition for such people? You should, provided your income is more than 15 lakhs. First condition, income should be more than 15 lakhs. Which income? Indian income, not foreign income. Second, apart from that 180 days condition, which you will never follow, I know, you are escaping before that only. What I am doing? You should stay in India for 120 days. If you have stayed in India for 120 days, and 365 days in the last 4 preceding previous years, I will automatically make you RNOR. Sir, I didn't, should I check those conditions? No need to check. This is deemed RNOR. Automatic RNOR. Right? So RNOR can come in two areas now. One, check those additional conditions. What is the concept of you calling yourself RNOR without checking additional conditions? Your sister example. Your sister was a PIO, correct? Yes. So why is 60 changed to 120? Because they didn't want to make it very, very rigid. Somebody asked a good question. Why did they make it 60? Why did 60 only is better? No, actually more rigid, 60. Why did they make it 120? Many representations were made saying that, Nirmala madam, we are coming to India. We are coming there to meet our family. We will definitely stay 2-3 months. Definitely. We will stay 70-80 days in our country. And now if you are earning some Indian income, you are making us RNOR. Which means we'll never come back to India then. If that is the case, strict case. So they said, no, okay. Up to 120 days you come. Generally people come for 2-3 months. No, I will not touch you. Don't bother. 2-3 months you come, you do something, you go, you earn Indian money, I will not touch. These are for those cases specifically. For setting up business in India, they have made their home part India, part there. 4-5 months they are staying here only. 150 days they are staying here. And just to escape that 180 days, they are escaping, they are going. And I have cases with me. So much income I am losing. So please take back. So I have made it 120 days. 60 days would have been better, but it would have been nobody would come to India only then. Welcome only India for like 20-30 days and go. They said, no, you meet your family, you stay 3-4 months, you stay. But if you are staying for more than 4 months, that is 120 days, I'll have a doubt. Doing some golmaal here in India. Who would stay for 4-5 months in India? Then which means you are doing something here. You do something. If you are earning more than 15 lakh, no, then I will charge. Correct? This amendment is important because it's not well received by NRIs. NRIs are like, what is your problem if I earn money? I am giving back a lot of foreign exchange to India, no? I'm giving back, I'm sending money back to India. What is your problem? Your foreign exchange reserves are increasing. Many big industrialists, businessmen have told this is a bad move, honestly. I just show you. Even Narayan Murthy told, let NRI stay 182 days. What is your problem? Why 120? Let them say 60, 70, 80, 180, 200, 250 days. Let them stay. What is your problem? He only told in many cases that it is not good. Correct? He said, you said tax was leaking. You didn't make any extra income because of all this. Useless sections, he told many times. So you should remember all these things. You will never forget. So, gist of the story, guys. Gist of the story. Without any confusion. If a person of Indian origin, your sister, you take your sister example, your sister or brother comes to India and her Indian income is more than 15 lakh. That is the first condition. Indian income should be more than 15 lakh. What should be, when is it taxable, when is it not taxable? Very simple. If her stay is less than 120 days, she is still a non-resident, yes or no? Yes. If her stay is less than 120, she is still a non-resident. No questions asked. Second, stay is 120 days, more than 120, less than 182. This is the amendment, yes or no? Because if it's more than 182, second condition is no use only. First condition only will come, no? This is how you should study. Stay is more than 120, less than 182. Stay is more than 120, less than 182. Then stay in India should be greater than or equal to 365 days in the last 4 years. That condition also has to be followed. Correct, no? What is the condition? 120 days in the previous year and 365 days in the last 4 years. 365 days in the last 4 years. If that is the case, then you will be deemed to be RNOR. You are an RNOR only if point number 1 is a yes. Your RNOR only if point number 1 is a yes. Correct? You are a RNOR only if the point number 1 is yes. Online people, are you understanding, all of you? Yes. RNOR only if point number 1 is a yes. This is the important change. You should take a look at this. First of all, you should be a person of Indian origin. Second, come to India. Third, Indian income how much? More than 15 lakh. Fourth, stay less than 120, you leave it. Stay should be more than 120, less than 182 days. And stay in India must be 365 days in the last 4 years. Then only your RNOR. Sir, my stay is more than 182. Then the second condition will not come only, no. The stay is more than 182. Obviously, you are a resident. The moment you are a resident, then you should check 2 additional conditions. But for this middle column, there is no need to check any additional condition. There is no need to check any additional condition. Online people, please respond. Able to understand? Yes, no. Right. So these are all the important areas. Now there is one more section called deemed resident. 6(1)(a). Unfortunately, many people mix everything. They're telling this is only deemed resident. No. Deemed resident is a totally different concept. Deemed resident is a totally different concept. What do you mean by deemed? That is also an amendment, by the way. That also is a change. That's why people get generally confused, because everything is mixed. Right? What do you mean by deemed resident? Let us see. That is also an important concept. 6(1)(a), deemed resident. Now, before deemed resident concept, when I say 182 days, 182 days, the day I come to India and the day I am going from India, counted or not counted? I took a 1 a.m. flight out of the country, or 12:05 was my flight, morning. That 5 minutes extra I stayed in India, that's all. Should I count that in India or not in India? In India. I'm coming back. I'm coming back to India. I came at 1 a.m. Then I still have the full day, that's okay. I came back at 11:55 p.m. Basically, I just, when I touched my feet touched Indian soil, then only it was some 11:58 p.m. 2 minutes I stayed. Will it be counted as 1 day? Yes. So if you see, the day of arrival in India as well as day of departure shall be considered while calculating the period of stay in India. Exempt income, no tension. Period of stay in India. What about that ship fellow? That ship guy. For the ship guy, CBDT has told period beginning on the date entered in the continuous discharge certificate and shall end on the day when the continuous discharge certificate says it has ended. So for the ship guy, it is different. So for example, for the guy who is in the ship, generally they will give a separate, like this they'll give in the question only. Date entered in the continuous discharge certificate, 12th August. Date entered into the continuous discharge certificate in respect of signing off of the ship, 21st January. So this, both the days will be counted from this day to this day. They'll give in the question only, don't worry. Now, deemed resident. Because of the questions only, people get confused. This one, new section. This is also a new section, not tested so much in inter or final for that matter. This is also similar to whatever we discussed. That's why people get confused. What did we discuss? Your sister coming to India. See here also, person should be citizen of India. Total income other than income from foreign source exceeds 15 lakhs. Your sister also 15 lakhs case was there. But this is the most important thing. This is not your sister's case. Should not get confused. An individual shall be deemed to be resident in India in any previous year if the following conditions are satisfied. First, person is a citizen of India. Here also there is a difference. What was in your sister's case? Person of Indian origin or Indian citizen? Here person of Indian origin is not there. So please don't get confused. That is totally different. Sister's example is different. This is different. This is only citizen of India. Person of Indian origin is not there at all. Next. Total income other than income from foreign source exceeds 15, same. That is no change. There also more than 15. This is a more. Third one. There what they are told. They had come on a visit to India. Here there is nothing like that. If he is not liable to tax in any other country or territory by reason of his domicile or resident or other criteria of similar nature, then he is deemed to be resident but not ordinary resident. So now tell me, I come to India for just 40 days. This is one scam. I have come to India only for 40 days. Am I a resident? No. But in that 40 days only I set up nicely all businesses in India here, and I go abroad and I will join a country, living in a country where there is no income tax only. For example, Cyprus, British Virgin Islands, some part of Switzerland, where they are called tax havens. There is no tax only there. And I will chill there. Nirmala madam saw many such people were coming to India, staying for less than 60 days also, calling themselves non-residents, and then making lot of money from their business in India. It is not taxable in India also, not taxable abroad also. Why? Because they lived in tax havens. So for such people, this section is there. 6(1)(a), deemed resident. There was one problem after this. Dubai tax rate was 5%. And before that 5%, in Dubai tax rate was 0%. So Dubai businessmen, lot of Kerala people from Kerala everywhere across living in Dubai. To go to Dubai, it is like mini India only. Little bit cleaner version of India because population and all is less there. So those fellows called up Nirmala madam and said, are we also deemed residents? Because we are in a country where not liable to pay tax. So why are you making our income also? You had a rule 60 days. I am only coming to visit my family 40-50 days in the country, and I am coming here and doing my business here. Indian business also, chips business I am managing here only. I am selling everything here. Why are you taxing in India, madam? I am not a resident. So Nirmala aunty said, sir, this is not for you at all. She came out with a superb clarification. Not liable to tax means what? Tax havens. If your tax is 0%, you are still liable to tax. Beautiful. If your tax is 0%, you are still liable to tax. But at what rate? 0%. Correct? There is a difference between exemption and tax at 0 rate. Dubai, it was 0. Now they have made it 5%. So now Dubai people cannot cry. They are paying tax there anyway. Not liable to tax means what? Where tax is not there only. There is no concept of income tax. In Dubai, it was taxed at nil rate. So they said, Dubai fellows, you please don't worry. In the exam, you should look out for the words not liable to tax. Institute stupid fellows will confuse you by giving UAE, Abu Dhabi. You don't care about the city now. You don't care about the country. Let them give UAE, let them give Abu Dhabi, let them give whatever they want. You just see the wordings, not liable to tax. If they say UAE not liable to tax, assume UAE is a tax haven. That's all. Nothing can be done. Unfortunately, institute should give questions which are which why the law was framed, based on that they should give, but that you know they won't give. So again I repeat, in the exam do not go behind name of the country. Just go behind whether it is taxable or not taxable. If they use the word not taxable, your assumption is okay, it's a tax haven. Dubai, they'll say, where there is not liable to pay tax, no problem, tax haven it is, I don't care. So then 6(1)(a) will come. You see, for example, one question here. Mr. Naman, Indian citizen, currently employment in Abu Dhabi, 22-23, period of stay 59. That's all. For the financial year 22-23, Naman is not taxable. See, not taxable in Abu Dhabi. If it is no Indian income, then it's okay. But if Indian income is there more than 15 lakhs, then only you will have to tax. So if you see, not taxable in Abu Dhabi means what? Abu Dhabi is a tax haven. And his Indian income for the year 31/3/23 is 20 lakhs. Is it more than 15 lakhs? Yes. So Naman is a deemed resident under 6(1)(a). Even though Naman is the state for less than 60 days, he is a deemed resident. So please, what people confuse is, they will confuse this concept, your sister's concept, with deemed resident and full mix, Chauchabad, Kesribad, Karabad, everything they'll make. That's the problem. Both are totally, all that you will understand only when you read the memorandum explaining the finance bill, why the law came. So both are totally different. This is what I wanted to discuss with you. Both are absolutely different. Right? So should not get confused. Stay less than 120 days, you are non-resident. Stay more than 120 but 182 days, then this concept will come. So if your stay here, PIO is there. For deemed resident, PIO is not there. Only Indian citizen. That is most important. You should know. Only Indian citizen. Right? So if your sister is an Indian citizen coming to India, earning more than 15 lakh, and she goes back to a country when there is no tax only liable there, then 6(1)(a). But if she stays for India for 40 days, 50 days, goes abroad, makes money more than 15 lakhs, still have to see 6(1)(a) if it's not liable to tax there. But she's living in USA, but her money, etc. is coming from India, from a business setup in India, then the other concept, other amendment will come. So two amendments were made. One was the amendment there, one was amendment here. We mix and read, that's the problem. 6(1)(a) is not equal to the other section. Right? So this is totally different and 6(1)(a) is totally different. That we should know. Right? That is what it is. So quickly we'll finish off other things, then we'll take a break. So residential status for HUF and all is what, guys? Very simple. Control and management of affairs wholly or partly in India. If the control and management of the affairs of the HUF is outside India, non-resident. If the control and management of the affairs is in India, then you are a resident. And whether HUF is a ROR or RNOR, that depends on the Karta. If Karta satisfies both additional conditions, then you are ROR. If Karta satisfies one or more additional conditions, you are RNOR. And residential status of company depends on the concept of POM, that is place of effective management. Place of effective management. If you are an Indian company, you are a resident. Any other company depends on where the place of effective management is there. If the place of effective management is in India, then you are a resident. The place of effective management is outside India, then you are a non-resident. What do you mean by place of effective management? All the key managerial personnel are in India. or control or the decisions are happening in India. Who is this KMP? Managing Director, whole-time Director, Manager, CEO, CFO, Company Secretary. All these people are in India, controlling the show. Then it is called place of effective management. Place of effective management. The place of effective management is in India. That is one thing. Outside India, that's a different thing. Place of effective management means a place where the KMP on commercial decisions that are necessary for conduct of a business of an entity are made. Indian company is always a resident. Right? Now, for example, this Tesla, Elon Musk, opened a company in Bangalore actually, Tesla Bangalore. 100% subsidiary of Tesla USA. Here they appointed 2-3 directors, Indian directors only they appointed. Now tell me, full control is by Elon Musk. Is Tesla Incorporated, which is Bangalore, Tesla Bangalore, is it Indian company? What is the residential status? Resident or non-resident? Everything is controlled by Elon Musk. But Tesla Bangalore is registered, incorporated under Companies Act 2013. Resident, non-resident. Many of us will tell non-resident. Wrong. It is resident. Why? See this? An Indian company is always a resident, irrespective of where the poem functions. The concept of place of effective management will never work for Indian company. If you are registered under Companies Act 2013, you are always resident. Sir, but full control is from abroad. I don't care. It's registered in India. Always resident. General answer is non-resident. That's wrong. Other company only. It is foreign company. I should see place of effective management in India. For example, Hamleys toy shop. Hamleys India also has come now. Hamleys is a toy shop in USA, UK. Fully owned by Ambani, Reliance. Now tell me, Hamleys UK is resident or non-resident? Hamleys UK, resident or non-resident? Resident. Why? Place of effective management is in India. So, resident. Place of effective management is in India. So, it is resident. Place of effective management is in India. So, resident. What about Apple Incorporated? Where is it? Outside India. Who controls it? People from outside India. What is it then? Non-resident. But if Apple USA has a subsidiary, Apple India, even if it's controlled by, all control comes from outside also, since it's an Indian company, it is a resident. So you need to see like that. Done. Indian income taxable, foreign income for non-resident is not taxable. Indian income for non-resident will be taxable. That's about it, guys. I will take a break. All this you leave. You cannot do all these things now. So let's take a break and we shall continue. So it's 1:45, 2 o'clock. Is it okay? 2 o'clock. 2 o'clock will continue. Online people, take a break for 15 minutes and come back. I'll just put the break signal here. I'm not stopping the streaming and all. Streaming will be going on. Okay. 2 o'clock sharp, we are starting. Okay. All right, guys, let's begin. Okay, so let's begin with all of you there, online people. Please let me know. Okay, guys, let's begin. Income from house property. Again, a very important chapter which is pretty easy, but then still people ignore and then make a mess of it. So we'll do it properly. And then, of course, predominant chapters are PGBP, TDS, capital gains, IFOS, all this we have to do salary in the next couple of days, whatever it is. Right. So let's begin. Income from house property. Income from house property. So gist of the story is the charging section is section number 22, my dear friends. Section 22 is the charging section for income from house property. So this is how it is. Two important conditions are required in house property. First of all, there has to be house property, undoubtedly. That house property can either be commercial or residential, right? And there has to be an owner. Owner means what? You should be the owner. There should be title deed in your name. Which means if this room I have taken it on rent and I have subleased it to somebody else. So is it house property? No, because I am not the owner. So basically that money, if I do from subleasing, etc., will definitely be taxed, but not be taxed under income from house property. So for house property to happen, we should be, point number one, have house property. Secondly, we should be the owner. As simple as that. So house property means what? It can be commercial or it can be residential. Both the things are counted in house property. The tax which is charged here, it is charged on something called as annual value. So how to compute annual value is a different ball game, is what we need to do. And the tax is computed on either building, standalone building, or land appurtenant thereto. Appurtenant means attached. So it is charged either for the building or the land appurtenant thereto. Appurtenant means what? Attached. Is there, if I just, what do you say? Just rent out a land. I have a land, I will rent it out for parking. In Bangalore, the crazy thing is parking is not there. So many people rent out the land only. If I rent out the land, is it house property or business or other sources? So that begs the question. It's very clearly given here. It is building or land appurtenant thereto. Appurtenant means it should be attached. So building has to be there for sure. Or building plus land is possible. Only land not covered under house property. Right? So house, if I let out a house on rent, then section 22 will come. Why? Section 22 is a charging section. So if I let out a house on rent, then section 22 will come. Second, urban land. I told you in Bangalore, parking is a problem. So I will let out my urban land which I have for parking charges. I will make good money from that. So now that whatever 20 by 30 site I will sell, rent it out. That rent that I get, is it under 22? No. Why? Because there is no appurtenant thereto. Yes, there is no house property. All right. Third one, there is a house and there is a land attached to it. One nice garden is there. A row house concept is there in Bangalore. So it's, let's say, a 60-40 site. In that 20-30 is the house. Remaining is a nice big garden. Entire thing I am letting out. Yes. Will it be taken as rent? Yes. So section 22 will come for sure. Now what about, subletting? As I told you, Mr. A is the owner of the house property. He will rent it out to Mr. B, who is a tenant. Mr. B will sublet it to Mr. C, who is a tenant. So in this case, for Mr. A, the rental income that is receiving is income from house property. For Mr. B, the subletting income that is receiving is not income from house property, though it is derived from house property, but it is not house property because he is not the owner, right? So this rental income from subletting will be IFOS, income from other sources for Mr. B. It will be income from other sources for Mr. B. I have my entire building, let us say, 2 floors I have rented it out, 2 floors I have used it as my business only. Now this is my business, I have used it like that. Remaining 3, assume if I own this, remaining 3 I have given it for rent. Now here what will be considered as rent? Remaining 3. What about this building? It is taken as, it is used as by the business SSE, hence it is not a house property. Whereas this rented out 3rd floor, 4th floor will be house property. 1st floor, 2nd floor in my example only 1st floor, it is not house property. Treatment of that will be done in my next chapter, PGBP. Right? PGBP is one huge chapter. Right? In that we will coolly do everything. So today we'll start off if possible, or tomorrow full we'll do proper 4 hours minimum. Which is a huge chapter. A lot of things to discuss. Right? So there we will see what is the treatment. As simple as that. Now, ultimately guys, that is the gist of the story. Where there has to be house property, etc. All that we have discussed now. Yes. Then main business of my company is renting out. That's my main business. Then is it house property or business then? Oh, yes, that is business. As a Supreme Court judgment, Chennai Properties and Investments Limited, in that they have told where the main business of the SSE is letting out of properties, and the same is also included as principal business in the MOA, and the income from the same would be chargeable to tax as business income. So definitely it would be business income. Now I am talking about previous year 22-23. In this previous year, I was the owner of the asset. I made a lot of money till March 23. And in March, I sold off the property. Or let's say in May 23, I sold the property. Not here, let's see. In May, I sold the property off. Full year, I earned money, but in May, no longer. In the assessment year, I am not the owner. But in the previous year, I am the owner. I should see ownership in assessment year or previous year. That is one doubt. It should be always in the previous year. Because reverse case, something else will happen. Previous year, I am not the owner. Assessment year, I am the owner. So, it is not income from house property. It will go to the next year. Right? Very simple. So, SSE must be owner in the previous year. It is not material whether he is the owner in the assessment year. I don't care. He should be an owner in the previous year is what we have seen. Now, there are various types of house property. Coolly we'll see. What are the types of house property? One is called LOP, let out property. Under 23(1). Anything LOP is always taxable. Income from let out property always taxable. Second part of the deal is self-occupied property, SOP. Self-occupied property under 23(2). SOP used as residence and SOP used as business or profession. If the SOP is used as business or profession, for example, this building I own, assume, and this room I am using it for my own business. Am I paying anything for it? No. So, can I claim any expense? No. Secondly, am I earning anything from it? No. Hence, this has to be ignored. If the SOP is used for business or profession, ignore it for tax purposes. But if SOP I am using it as residence, then lawmaker gives you benefit of only 2 SOPs. If you have 2 SOPs, it is exempt. Third SOP, if you have some 4 houses. One you will stay, one spouse will stay. Third house, one more spouse. Some politicians will have 2. So that other spouse will stay. Then all the kids will stay in the 4th house. Now third house and 4th house, all in your name only. Third house and 4th house, what will happen? More than 2 SOPs. It's exempt up to 2. Remaining SOPs, deemed LOP it is. DLOP, deemed LOP, and it will be taxable here. So even if you have more than 2 houses, whatever, it will be deemed to be let out property. Deemed to be let out property. Now, to escape this, some people can do scam. Husband and wife are there, right? So, husband has 4 houses. What he will do? He will keep only 2. Remaining 2, he will buy it in the wife's name. Right? He'll buy it in the wife's name. Scam. So first of all, you can ask, sir, can I buy in the wife's name? Isn't it breaking any law? No. There is one law called Benami Prohibition Act. Benami means not in your name. But Benami Prohibition Act has one exception. You can hold an asset in your wife's name. No problem. Money comes from me, held it in the name of the spouse. No problem. Allowed. It's a problem now. So to escape the law, what I am doing? Husband is holding 2, wife 2. 2 plus 2, 4. But I am taking exemption of 2 here, taking exemption of 2 there. Problem. So to curb this from happening, one more section was inserted. Deemed owner. Under section 27. That is also very much part of house property. Deemed owner. In deemed owner, they said if a husband or anybody splits it into 2 parts and it's held in the name of the spouse, etc., then it is deemed that he is only the owner. It may be in the name of the wife, I don't care. It is deemed in the name of the owner, which means now all the 4 properties will be under the husband's name. 2 will be SOP, 2 will be LOP. He has to pay the tax. Next question in the MCQ, they may ask you, will clubbing apply? No. When I have already taken deemed owner and charge in the husband's name, where the question of clubbing will come? Clubbing will not come. So for deemed owner, whenever section 27 will come, concept of clubbing will not come. Little bit of interconnection we need to understand, right? So this is one more concept. Clubbing. In clubbing will not apply because section 27 deemed ownership will come. Deemed owner is husband will buy 2 houses. Remaining 2 houses he'll only buy, but in wife's name. So the income tax law, section 27 says, I don't care. I will disregard your wife's ownership. I will add it into your thing only. Under house property only I will do it. I will not add it under clubbing. I don't care about clubbing. House property only I'll club. Automatic clubbing is section 27. Fair enough. Now I have seen all these things. Now, how will I compute, guys? How will I compute? All this will come to it. How will I compute? Computation is like, I'll show you the structure again, but anyway, first of all, if there is a 2 BHK house, assume, and I am letting out the 2 BHK house for 5,000 rupees per month. Very simple, 5,000 rupees per month. Okay, so 5,000 into 12 will be 60,000. First, the lawmaker will tell, kindly compare it with the, first you should compare municipality value and fair rent. Municipal value and fair rent. What is municipal value? That house, as per the municipality records, what is the rate of rent in that particular area? You will get that with the municipality. So that according to them is 12,000 rupees. 12,000 into 12 is 1,44,000. This is as per the municipal records. But always municipal records will be less or more, will be less only. The market rate will be higher. Fair rent is the market rate of rent. That is in that particular area, similar house, how much rent it will go for. If it's a good area, it will be generally more than the municipality rate. If it's not a good area, fair rent may be lesser. So in my example, let's take the fair rent at 15,000 into 12, 1,80,000, 1,40,000 or 1,80,000. How much you are actually getting, guys? 60,000. Nirmala madam doesn't care about that. She will compare municipal record rent and fair rent. And she will tell you have to pay whichever is higher. Though I am earning 60,000, I will compute tax on 1,80,000. From this figure, third step is 1 or 2, whichever higher, 1,80,000. This figure will be compared with some figure called standard rent. Standard rent is the maximum rent that you can charge as per one law called Rent Control Act. The maximum rent you can charge as per Rent Control Act is called standard rent. According to the Rent Control Act, you can charge 30,000 into 12, 30,000 rupees. What is the maximum you can charge? 3,60,000. Just because this is the maximum doesn't mean that you are charging the maximum. You are getting only 1,80,000. So lawmaker says whichever is less. It's all logical, no mugging up. First is municipal rent and fair rent, whichever is higher. Municipal rent, municipal records. Fair rent, the market value. So ideally you should go whichever is higher only. Generally market value will be higher. Then take that value versus maximum possible as per Rent Control Act, considering all scenarios. So that maximum will be higher only always, or whatever fair that you are getting, it should be whichever is lesser only. Whichever is less. And then when you do 3 or 4, whichever is less, that thing is called expected rent. Expected rent is what is expected by the income tax department. Yes, the maximum or whatever you are getting, whichever is less. How much I am getting? 1,80,000. That's the expected rent. Now that will be compared with actual rent. In my example, actual rent is 60,000. Obviously, Nirmala madam will charge 1,80,000 or 60. 1,80,000. Why? We are scam fellows. What we'll do? We'll take 60,000 in bank, 1,20,000 cash. So to curb that from happening, it is 5 or 6, whichever is higher. 5 or 6, whichever is higher. Yes. So that will become what? My GAV, gross annual value. So again to repeat, first is municipal value, municipal records, or fair rent, market rent, whichever is higher. That figure versus standard, rent. Whatever is as per the Rent Control Act, whichever is less. That along with the actual rent, whichever is higher, will be my GAV. Now from the GAV, so basically again to revise, municipal value or fair rent, whichever is higher, at whichever is higher, standard rent, whichever is less, expected rent or actual rent, whichever is higher will be my GAV. From the GAV, I will have to subtract municipal taxes paid, other standard deductions, and whatever I get will be my net annual value. So that same structure is given here. This is how we should neatly write. Municipal value, fair rent, whichever is higher, and standard rent, whichever is less, actual rent, whichever is high, GAV. GAV, then municipal taxes paid will get me my NAV, and from the NAV I should deduct under section 24. This is intra-head deduction. Within the head only there is a deduction. 30% of NAV for everything they are given, for repairs, etc. Don't keep coming and crying. This is the ultimate thing. Don't come and keep on asking about the same thing. 30% of NAV, that is all you get. And then if I have taken some housing loan, that interest portion that I am paying, I will get a deduction. Interest on capital borrowed, loans, paid or payable, section 24P. Obviously, if I am SOP, all this will be zero because I am not earning anything. So if it's municipal value, fair rent, you take whatever amount, ultimately it will not be there because I am not paying any money. I am not receiving any money. That is, I am not receiving any rent. Nobody is paying me. That's why for SOP, there will be nothing. For SOP, standard deduction also won't be there. What is 30% of 0? 0 only. So what will you get? If you have an SOP, you can claim the interest deduction. But if you have let out property and deemed let out property, all these positions will come. All these things will come. So that is how it is. If they give you income from house property in the exam, what is it? Is it GAV or NAV? If they tell in the exam, income from house property so and so, GAV or NAV? What do you think? If they say rent, then you have to compute everything. But if they only tell you income from house property, so generally it is assumed that you have paid all the taxes, etc. So you should take it as what? NAV. And then what should you give for that? Deductions. If they ask you income from house property, generally it is before deductions. But if they say income after all deductions is this, then you should ignore. Right? They'll only give in the question, nothing to worry. Generally, they will not confuse you. They will actually give these NAV like that, they'll give. But suppose there is nothing on interest on capital, etc., they'll directly give you income from house property. Then you can assume that they have already subtracted it. But there will be indication in the question, so nothing to worry. Right? They would have given a NAV and then they will say you have to make the deductions. They'll not say make deductions. They'll give you indirectly capital borrowed was so and so, interest was so and so. Anyway, so that is what it is. We have seen this. So for example, municipal value is 80,000, fair rent is 92,000. Step this or this, whichever is higher, I should take 92,000. Standard rent, in some cases they'll give, some cases they'll not give. Assume they have not given. Expected rent will be this or this, whichever is less, 92. And actual rent they would have given 73,000. So this or this, whichever is higher, 92,000, like that. This, may or may not ask, but ultimately this is how the calculation is. Now the question is, what do you mean by actual rent? Actual rent means what? This is the formula. Actual rent is rent received plus rent receivable minus unrealized rent. Rent received plus rent receivable minus unrealized rent. What do you mean by unrealized rent? What do you mean by unrealized rent? Yes, this is a case where tenant has run away. Tenant has run away. Should not get confused with vacant rent, which we generally get confused. What is vacant rent? Yes, no tenant found. Vacant rent is the house property is closed. I am unable to find anybody. That is vacant rent. 8 months it was occupied. Then notice was given by that fellow properly as per the contract. 4 months it remained vacant. It is different compared to unrealized rent. Compared to unrealized rent. Unrealized rent means what? He was supposed to pay for 12 months. 8 months afterwards he has run away. Now you only tell me logically, will Nirmala madam charge that portion which you have not received also, or will she allow you to subtract? She'll allow you to subtract. Rent received, how many months you have received in my example? 8 months. How many months it is receivable? 4 months. How many months you did not receive? 4 months. 4 minus 4 cancelled. Why this stupid formula? I can simply say rent received. No. This is because earlier it used to be only rent received. Then they changed it to what? This. Why? People were cheating. We are Indians. We will say rent receivable 4 months is there. You pay that 4 months in cash. You stay there only in the house. Don't worry. I will show it as unrealized rent. So that I will pay less tax. They were doing that. Second, they did. You vacate this house. Let's just show that you have vacated. My one more house is there next door. You go stay there. No problem. I want to pay less tax on this. All this cheating they were doing. That's why to claim that subtraction, unrealized rent, they have some conditions. What conditions? The SSE, the tenant should have actually vacated the property. You have done everything in your capacity to recover the rent from him, is not paid. You have taken legal steps also. What legal steps? Notice you have sent him. Legal steps means not court case. Some notice you have sent him, email notice, phone notice, legal notice, nowhere to be found. Then it is unrealized. Now tell me, if you have deposit with you, is it unrealized rent? No. Why? You will subtract from the deposit. No. That's why unrealized rent means no, nothing is possible. You only recovered 8 months, that's it. 8 months you have recovered from there. 4 months you have recovered from deposit. Is it unrealized rent? No. So you should see it carefully. That is why rent receivable minus unrealized rent is there. Vacant rent on the other hand is where genuinely the house is vacant. Nothing can be done. So that is separate. Arrears of rent is what? That's one more concept. Arrears. Arrears means I would have told 3 years later we'll increase it by 10% your rent. 4 years over, that fellow also forgot to ask, you also forgot to pay. Then suddenly they remembered, hey, you have to pay that extra money, 2,000 per month. Both of that happens in this building many times. I forget to pay that landlady extra. She also forgets to ask. 1 year later, she'll say you forgot. I said, ma'am, sorry. You tell me how much, I'll pay. Nobody sees the agreement and all that. Simply it will keep on going. One fine day, she also would have genuinely forgotten. Her auditor will tell, ma'am, you have not collected the extra amount. Then she'll message me. Both of us will have a hearty laugh. She also forgot, you also forgot. Then please calculate extra, madam, we will pay. Arrears of rent. It is called arrears. So therefore, that also is taxable. It has happened 2 times already here for 2 years. I forgot. Basically, no one keeps a track of all those increases. She has only told increase has happened. You should pay. Okay, fine, no problem. We'll pay. It's not a problem. And generally, 5% increase happens every year. It can be 10% also in commercial buildings. Right? Simple. So, if you see, just a sec, unrealized rent. In adopting the actual rent, 4 conditions. The tenancy is bona fide. Bona fide means good faith. Defaulting tenant has vacated the office. Defaulting tenant has vacated. Or steps have been taken to vacate in office. It says. Just a sec, there is some problem here in the online thing. Yeah, defaulting tenant has vacated or steps have been taken to compel him to vacate. Compel means what? Force him to vacate. Defaulting tenant is not an occupation of any other property of the SSE. That's what I shouldn't have thrown him out here and given him one more thing later. The SSE has taken all reasonable steps to institute legal proceedings for the recovery of the unpaid rent or satisfies the assessing officer. Basically, all steps has to be taken. But if I have taken security deposit and all, then it is not to be taken into account. That is unrealized rent. Municipal taxes. What is municipal taxes? That is the tax recovered by municipal authority, local authority, gram panchayat, etc. Local tax, property tax. They can name anything in the exam. You can to keep your eyes open. There will be local tax, property tax, house tax, water tax, sanitation tax, whatever tax. Amount will be given in the problem. But what if they have given municipal taxes 10%? Then what will you apply it on? It should always be applied on municipal value. Always applied on municipal value. In the exam, they can give municipal tax payable is 50,000, municipal tax paid is 20,000. You will take 50 or 20? 20, because the law uses the word municipal taxes paid, not payable. Municipal taxes paid. That's very clearly given. Municipal taxes paid. On the other hand, they can ask you one more question. Municipal taxes paid is 60,000. 40,000 pertain to 22-23. 20,000 pertain to 21-22, which was outstanding but now paid this year. So you will take it 60,000 or 40,000? 60,000, because last year you had not taken this 20,000. So this year you have to take full 60,000. So it will be municipal taxes paid 60k. One more example they can give you. Municipal tax paid is 50,000. 30,000 pertain to 22-23. 20,000 you have paid next year's also. Advance. Will you take 50,000 or 30,000? 50,000, because the law uses the word municipal taxes paid. Actually paid is what you need to take. Next year will you get the deduction? No, because I've already taken this year. In the exam, one more question they'll give, municipal taxes was paid by the tenant. No, it should be paid by the owner, SSE. Municipal taxes paid 30,000. One more they'll say, municipal taxes of a building, 2 floors building, municipal tax was 50,000. Right, 50,000 paid by owner only, no problem. 1 floor was rented out, 1 floor was SOP. How much you will take? Municipal taxes paid by the owner for the year was 50k for the building. In that building, 1 floor was SOP, 1 floor was let out. In 1 floor, he was only living. When I subtract municipal taxes paid, should I take 25,000, assuming both are equal floors, or should I take full 50,000? But paid is 50,000. 50 or 25. One more case law. We should ignore municipal taxes which are paid on SOP. Because if you see, municipal taxes paid is nil. Yes, I should only take 25,000. To take it only for LOP and DLOP, not 50k. These are all small mistakes that we make in this chapter. Assuming this chapter is very easy, we'll think and we'll make these silly mistakes. Chapter is easy only, but we'll make silly mistakes. These are some of the points in municipal taxes point. Tenant, if he has paid, not to be taken. He has paid, that's all, but there's no deduction for you because it's paid by him, right? Actual rent, 10 months done, 2 months not paid, 30,000 rupees per month if I take. Rent received, 30,000 into 10, plus rent receivable, 30,000 into 2, minus unrealized 30,000 into 2 is my actual rent. But as I discussed already, it should be a unrealized rent is similar to bad debts, but it should be a bona fide tenancy. Tenant should have vacated or absconding, means is no longer available anywhere. Tenant should not be occupying any other property. All available legal steps have to be taken and already discussed. If any security receipt deposit has been taken, it will be added to the rent received here. In this rent received only, I will add the security deposit. So in that above example, 50,000 was the deposit, then I will take what? 3 lakh plus 50,000 plus 60,000 minus 60,000. So ultimately 50,000 on that I have to pay tax. It's like recovery to the extent of 50. How much is not recovered? 10,000 is not recovered, that's all. Ultimately that's what comes. This is regarding unrealized rent. We still have to discuss vacant rent. We still have to discuss what? Arrears of rent and all those taxation. One more in this entire chart, if you see, where what we can see is interest on capital. Borrowed, that is loans. Paid or payable, interest on capital borrowed, loans paid or payable. Now the question is, loan means what? I have borrowed money to buy house, point number 1. Second, that fellow has lent his house only. Is that loan? One is I have borrowed money, I bought the house. Second, you have only lent your house. You'll be like, okay, this is the house, you take it. You pay money later, no problem. Is that weird? I'm asking, is that the case? Or he has lent me the house, as a repayment, I have given him my old house. Exchange. Fourth one, he has lent money, I am paying back money. What is a loan? I have taken money from you, I am repaying by giving my Activa. Is it a loan? I have taken Activa from you, I am paying you EMI. Is it a loan? Car loan, vehicle loan. Is it actually a loan as per income tax? I buy a asset, car. I'll keep paying every month EMI. I'll take a two-wheeler. Every month I keep paying EMI. What do you think? So I'll take my two-wheeler and I would have given you in exchange another two-wheeler. Is it a loan? So the issue of loan went to Supreme Court. They decided what loan is. Not kidding. So ultimately, lender can lend anything he wants. Lender can lend money. Lender can lend Activa. Lender can lend money again, Activa, whatever. Recovery from borrower should be money. Supreme Court has defined loan. Lender can give cash or kind. Recovery should be in cash only. Recovery should be in cash. Right? So, money, Activa, all that, I don't care. I should see the recovery part. From borrower, how am I recovering? Money. That only is a loan. That only is a loan. Now, many doubts can arise here. Interest on capital borrowed loan. Now I know what is loan. What is loan? However I have taken, I don't care. But I have to pay back through what? Cash. Second case, I have taken the loan for interiors, allowed, or for construction of the house. What about renovation? What about reconstruction? Is it for construction afresh or is it for demolishing and reconstruction? I have taken money on old houses there. I have got one bulldozer. I'll pay 10,000 rupees for the bulldozer using this loan only. Is it allowed? So it all talks about interest on capital. Now that I have borrowed 10 lakhs, in which 2 lakh rupees I gave to the bulldozer fellow. So should I take interest on 10 lakhs or interest on 8 lakhs only? Because 2 lakhs is not allowed because I didn't use it for construction. I use it for demolishing. Whatever I am discussing is a case law in the court. What is allowed? What do you mean by capital borrowed? For what? So, based on court decisions and the Bear Act, these are the dialogues. Not even kidding. Purpose will be acquisition of the house, repair of the house, renovation of the house, reconstruction of the house, renovation, any name, whatever you can give, refurbishment. One of my friends has a startup. He's a chartered accountant. He has a startup. His startup is only to renew toilets. I'm not even joking. All our houses, old toilets will be there. He will come and design the toilet completely different. You'll be shocked to see the toilet. The best feature in your house will be your toilet. So he has a startup. He got funding recently. Some $1 million he got. Chartered accountant. He left CA. He was working in Decathlon, like boring. Now with the same CA knowledge, I'll do this. Doing very well. His father had tiles business, toilet tiles business. He merged both and now he has very good design sense. He'll come to you, your toilet looks like beep. Looks horrible. Now I want to convert the toilet into like one 5-star hotel toilet I'll make at dirt cheap rate. I will refurbish your toilet. Okay, how much cost? 5 lakhs. I'll make full interiors completely like entering into a 5-star hotel. That 5 lakhs you don't have. You go borrow a loan. Is it allowed? Yes. Interest on that loan is allowed because it is for renovation, refurbishment, everything. Constructing new, reconstructing. Sir, I'll demolish that entire house including the toilet. Will you build another house and toilet for me? Yes. Everything is covered. So don't worry about that. Now the question is, third question they'll ask you to confuse. Loan was taken for acquiring a house. Loan was taken for renovating house. All that okay. But they'll tell loan was taken from your friend. Who's charging you, since he's your friend, charging you 6% interest. SBI rate is 9%. What will you do? First of all, is it allowed? Okay, if you say it's allowed, will you take 9% higher benefit or 6%, whatever you are paying? 6%. You have taken a loan from money lender. Money lender will not give you at 9%. Money lender will give you at 12%. So you will take 12% or 9%. That is one more doubt. Will you take the percentage as per SBI rate or will you take percentage as per actual payment? 12%. Actual, we'll see. Third question, as I answered, was source of loan can be anything. Bank, financial institution, related party, friend, girlfriend, boyfriend, family, future family, everything. Past family, ex-wife also you can take money, no problem. Then money lender, anything. Income Tax Act doesn't care about all these things. Income Tax Act says rate and all I don't care. You take at whatever rate you want, but I'll give you exemption only to a certain amount. Rate I don't care. You take whatever rate. My exemption is for your deduction, sorry, is for your amount. An amount I'll tell you. You take 10%, 15%, 20%, 40%, I don't care. There is one law, believe it or not, called Usurious Loans Act. In Usurious Loans Act 1925, you cannot charge interest more than 2.5% per month. Means maximum interest you can charge is 24%. Let us say I am paying 30% interest in violation of Usurious Loans Act. Income Tax Act says I don't care. You take whatever interest you want, but I will fix the amount. Right? So income tax, when I say income tax, does income include illegal income? Yes. Do you think there's no tax on illegal income? Why not? 50% of the collection comes from rates, etc. Illegal income only. So income tax does not differentiate between legal and illegal. Money is money. That's what I told you. If the husband splits the property in between him and his wife, Income Tax Act doesn't care whether it's against the law or for the law. Though it's for the law. Benami prohibition gives an exception. Even if it did not give exception, Income Tax Act doesn't care only. For me, it is income. That's all. Income includes negative income. Income includes illegal income. That's the definition of income in income tax. Anyway, so rate, I don't care. Now, this happens to many of my clients also. One of my clients is getting a loan from Tata Capital at 11% per annum interest. ICICI fellows came and said, I will give you at 9.1% interest. He took one loan from ICICI to repay Tata Capital loan, and Tata Capital loan was taken for house construction. It happens. It really happens practically. It's called porting of loan. Number porting, you tell, like porting of loan. I will take a loan, higher loan amount at 9.1% to repay the loan which was taken at 12%, which was actually taken for building the house. What do you think? Allowed or not? Yes, Income Tax Act doesn't care how many loans you take. So if I have taken a loan to recover one more loan, allowed. Interest on loan to repay another loan which was taken to acquire the property, allowed. Allowed. This entire year, interest which was accrued was 1 lakh rupees. But from my bank account, what is paid to the bank was 80,000 rupees. Right? For the previous year, 22-23, at the time of filing the return, accrued interest means I was supposed to pay 1 lakh. How much I paid? 80,000. How much deduction I can claim? 1 lakh or 80,000? Yes, 1 lakh. This is not municipal taxes payable or paid. This is payable. Good. All that you remember. So if it is interest due, it is 1 lakh. Actual paid is 90,000. Accrued interest is taken into account. Accrued interest. So basically how much you will take? 1 lakh. Now there is one clause in the agreement. If you don't pay the interest on time, I will levy a penalty of 1% on this. So you will now have to pay, let's say 5,000 rupees fine. Or let's say 1% on this is 1,000 rupees. How much is the interest that I am supposed to pay? 1 lakh. How much is not paid? 1 lakh is not paid. And my rule is very clear. If you don't pay properly, on the entire amount, I will charge 1%. What is 1%? 1,000 rupees. Now tell me, can I claim 1 lakh 1,000 or it should only, that is called penal interest, or it's only 1 lakh? Only 1 lakh. Penal interest not allowed. Penal interest not allowed. Similarly, bank will charge something. Bank commission, bank brokerage, all those is not allowed. Why not allowed? Everything is allowed in standard deduction of 30%. 30% of NAV is for all these things only. Normal repairs, etc. I have taken a loan from my auntie in USA. And I am paying her in US dollars. There will be currency fluctuations. One payment when I make, $1 will be 80 rupees. Next time when I make the payment, $1 will be 82 rupees. Interest payment I am making regularly to her, EMI. My auntie only has given loan, no problem. Allowed or not? Allowed. Everything is allowed, guys. No tension. Interest on loan taken from outside India also, it is allowed, but there is one condition. TDS has to be deducted and remitted. Interest paid outside India, you have to deduct and pay TDS. If you are an agent, if an agent is there in India to him or to your auntie directly, you have to deduct and remit. Because, very logical point, if Nirmala madam allows you this 1 lakh because you took some loan from abroad, she allows you this 1 lakh, allowing means your income will reduce or increase? Reduce. You will pay less tax or more tax? Less tax. But now think about it. You transferred that interest amount outside India to your auntie. Your auntie has not bothered paying income tax. For your auntie, will it apply? Yes. Income accrued or arising in India. Definitely it is taxable. Should she pay income tax as per Indian law? Yes. But she is now not paying. Why? She will not pay only. Now, double, trouble for government. On one side, they have given you full 1 lakh deduction. On the other side, an interest amount of 10,000 rupees, for example, your auntie has not paid tax. That is why this section has come. What have they told? You take the benefit as long as your auntie has paid the tax. How will auntie pay tax? TDS should be deducted and remitted. What is the rate of TDS, etc.? We will see in TDS chapter. Right? And generally, foreigners tax, that you don't have it. 195 is not there. All chapters are actually interconnected if you study it the right way. So yes, definitely you should deduct and remit. So for example, the journal entry will be what? Interest account debtor 1 lakh to interest payable 90 to TDS payable 10,000. Interest payable of 90,000 will be allowed even though if it is not paid, as long as TDS is remitted to the government. TDS payable 10k to bank, 10k if you already paid, then no problem. Interest payable, whether it is payable also, paid also, fully allowed. Very good provision. Now, the interest portion is allowed to you on accrual basis or payment basis. Accrual basis we know. But the interest portion is allowable to you before the completion of construction or after completion of construction. Today I take a loan, house will be constructed in 2 years, I need money. I will keep on paying interest every year. In this, my current, P&L account only, my current return of income can I take, or should I wait till the house is constructed? Yes, it is always and always allowed till the only when the house is constructed, guys. So coming to pre-construction interest or pre-acquisition interest. It means interest pertaining to the period before the date in which construction was completed or house property was acquired. Interest payable during the construction period preceding the year of completion of construction can be accumulated and claimed once for all when as a deduction over a period of 5 years in equal installments commencing from the year of completion of construction. There will be no interest deduction allowed to you until you finish the construction. It's called pre-construction period interest. Pre-construction period interest. That is one part of the story. How much interest is allowed? We'll see that. How much interest is allowed? For LOP or DLOP, full amount is allowed. For a let out property or deemed let out property, full amount is allowed. For a self-occupied property, case number 1, case number 2. Case number 1, the loan should have been taken after 1/4/99. When should you take? 1/4/99. Loan is taken after 1/4/99. Let's see here. DLOP, deemed let out property. Sorry. If it is DLOP and SOP. We are doing SOP. If it is SOP, if the following conditions are satisfied, loan is taken on or after 1/4/99 as discussed. Loan should be taken purely for the purchase or construction of property, nothing else. Either purchase or construction, no renovation, no repair. Either purchase or construction, undoubtedly. Third, if loan is taken for construction, construction should be completed within 5 years from the end of the financial year in which the loan was taken. So loan was taken in January 23. What is the end of the financial year? March 24. From there, 5 years. 5 years from the end of the financial year in which the loan was taken. So actually you will get 6 years including this year. Whichever part of the year you got, that plus 5. If all the 3 conditions are satisfied, the maximum interest which is allowed to you will be 2 lakh. If all the following conditions are satisfied, what are the 3 conditions? First, loan should be taken after 1/4/99. Second condition, it should be taken only for the purchase or construction of building property, basically. Third one, it should be taken and you actually should construct the house within 5 years. If you don't take the, what if the loan is taken for repair? If loan is taken for these things, then 2 lakh. If loan is taken for repair, etc., yes, just 30,000 is allowed. Correct. Instances which do not comply with case number 1 means what? Loan is taken for other than construction or property. Loan, it was not even constructed within 5 years. You took 10 years to construct, then 30,000. Loan was taken before 1/4/99. That will not come, but anyway, because it's too old. That is for SOP. But most interesting thing for LOP, full amount of interest is allowed. 3 lakh, 4 lakh, 5 lakh, whatever it is. If you want to have lot of loss from house property, better to make it as LOP or DLOP. Why? You can claim interest. You can claim lot of interest. Online people, are you understanding? Reply with a yes or a no or whatever. Just making sure you're awake. Afternoon session is the most deadly session where you will be almost, you would have slept off. Eyes will be closing. But when the eyes is closing, at that moment, what should you remember? See results.nic.in, right? FAIL popping at you, and automatically you will wake up. Yes. Good. All of you are there. Very good. Yeah, pink color screen, dirty screen. Results. Have you seen? You would have seen, no? Foundation results. Purple color, dirty design. Pink or purple, whatever color that is. Yes. So, DLOP. DLOP or LOP, no limit. No limit on interest. Full interest is allowed. Yes, all the smiling assassins in institute website, they'll be there. So, all these things to be discussed. Very simple. So, yeah. So if the loan was taken on 11/11/2016 for the purpose of construction, in order to avail construction of 2 lakh, first of all, is loan taken after 1499? Yes. Was it loan taken for construction of house property? Yes, construction. Loan, is it, construction will complete within 5 years. So what is the end of the financial year? They are taken on 11/11/2016. End of the financial year is 31/1/3/17. 5 years from there, 31/3/22. Construction to be completed before 31/3/22. So it's talking about pre and post. Let's see an example here. On 1/4/2018, Mr. Gill took a loan from ICICI Bank of 30 lakhs at 9% interest. This was for construction of Mr. Gill's house. Name Sarah. No relation to anybody else, right? Yes. Then here, if you see, on 1/4/2018, of course, construction had begun, took a loan also. When did it complete? Let us say here, on 19/9/2021, construction was completed. So, construction had begun on 1/4/2018. 1/4/18 to 31/3/19, nothing happened. Here, foundation completed. Next 1 year, 31/3/20 to 21, first floor constructed. And finally, on 19/9/21, construction was completed. Now, you have to compute the pre-construction interest. 30 lakh into 9%. 2,70,000 was for previous year 18/19. Here second year also 30 lakh into 9%, 2,70,000. Third year also 2,70,000. Fourth year is also 2,70,000 only. But I need to split this between, this is the full year. Guys, even though it came on 19/9/2021, what did the law say? Pre-construction interest. Interest payable during the construction period preceding the year of completion can be accumulated. What is the year of completion? 21/22. When did it complete? 19/9/21, which means is the financial year 21/22. So this entire year's interest, 2,70,000, is deemed to be post-construction interest. Because what will be accumulated? Only till the year of completion, preceding the year of completion. What is the year of preceding the year of completion? Till 31st March 21. So this 2,70,000, this 2,70,000, this 2,70,000 will be called pre-construction interest. Overall 8,10,000. 8,10,000 will be allowed for 5 years. Allowed in 5 equal installments. From which year? From the year in which construction was completed. So 8,10,000 minus divided by 5 is 1,62,000. 1,62,000 will be allowed from the year in which construction is completed. Construction is completed when? In 21-22 it is completed. So 21-22, 22-23, 23-24, 24-25, 25-26 it is allowed. So that year you see for 21-22, 2,72,000 is the current period interest and 1,62,000 is the pre-construction period interest. Overall is how much? 4,32,000. If this is a let out property, full 4,32,000 is allowed in that year only, no tension. But if it is a self-occupied property, then I should see the conditions. Was the loan taken after 1,499? Yes. Is it for construction? Yes. Then what are the other conditions? Construction, was it completed within 5 years? Yes. So how much is allowed? Up to 2 lakhs. If the loan was taken for something else, like renovation, then 30,000. Then they can confuse you by giving other expenses and all. No other expenses are allowed. Why? Everything is included in this 30% standard deduction. They can confuse you. Repairs, maintenance, insurance, electricity charge, water charges, everything is included in this 30%. So no need to check anything else. So same thing we have done. Reconstruction, all this you leave, done. What about vacant rent concept? We have done unrealized rent, we have done rent receivable, rent received, but I told you there are two other concepts: vacant rent, arrears of rent. What do you mean by vacant rent? Vacant rent is nothing but where when there is no tenant only available. So in this concept, we need to know concept called expected rent, actual rent, vacant rent. What is expected rent? We know the calculation. Municipal value, fair value, whichever is higher, then it's less, whatever, finally we will get expected rent. Expected rent, we will now compare it with what? The actual rent. So expected rent, assumption, 3 lakh rupees per annum. Rent per month is 30,000. What is the vacancy? 3 months. 3 months it is actually vacant. Actual rent is how much? 30,000 into 9, 2,70,000. Vacant rent, 30,000 into 3, 90,000. Overall, if it were not to be vacant, I would have earned 3,60,000 rupees, which is way more than expected rent. Is way more than expected rent. I would have earned, but unfortunately, I am not able to earn because 3 months the thing is vacant. So when I am taxing now for the entire year, according to you, you will tax 3 lakh rupees or you will tax 2,70,000. You will tax me on 3 lakh or you will tax me on 2,70,000. 2,70,000. Because I will go to Nirmala madam and say, madam, I wanted that extra 30,000 into 3, but the thing is vacant. The tenant left, he gave one notice neatly and he left, and I am now vacant. Now nothing can be done. So how much is chargeable? Nirmala madam said, okay, if your expected rent happens to be less than the sum of AR plus VR. What is expected rent? 3 lakh. What is actual rent? 2,70,000. What is vacant rent? 90,000. What is 2,70,000 plus 90? 3,60,000. If it was not vacant, would you have earned more? Yes, sir. I would have paid more also. I am happy. Okay, don't worry. I know it is genuine. Take your GAV as 2,70,000 only. If your expected rent is lesser than AR plus VR, then take AR as GAV. But people were doing scam. Expected rent was 3 lakh. Bank account they took only 20,000. They showed vacancy also. Ultimately, actual rent 20,000 into 11, 2 lakh 20, vacant rent 20, overall 2 lakh 40. What is the expected rent? 3 lakh. What is your rent? 2 lakh 40. They said your expected rent of 3 lakh is more than what? Actual rent plus vacant rent. So our actual rent is 2 lakh 40. Sorry, 2 lakh 20. Vacant rent is 20. Overall it is 2 lakh 40. Your expected rent is 3 lakh. So they are saying now you are cheating. You are charging less. What will I generally do there? Expected rent or actual rent, whichever is higher. Yes or no? The formula. Expected rent or actual rent, whichever is higher. Here also I will do the same thing. Since expected rent is more than actual rent plus vacant rent, I will use the same formula. Expected rent or actual rent, whichever is higher. This only is higher. So 3 lakh, please pay tax. Though you collected 2 lakh 20, I will charge on 3 lakh because you are collecting less. The moment you are collecting less from the bank, I will assume you are collecting from cash. So please pay. No fool will give the room on rent for lesser. Unless it is for education. We have a reading room called Swadhyaya, just 100 meters from walk from here, 50-meter walk from here. So that lady is a very nice lady. She has given the entire rental at a slightly lesser rate compared to market rate. Slightly less, not very less, but yes. She said because you are doing it for a not to earn money. It is just to break even and to give the facility of reading room to the students. Fair enough. Yes. We didn't revise the rates only for 3 years. Recently we revised it extra because our heroes, even in winter, they were using AC. So bill was coming some 20-25,000 per month AC. We have 3 ACs like this there. That to cassette AC, it requires little more electricity. Yes. So to manage that, we increase the rent little. It's still very, very less compared to all other areas because of the services. Yes, then in that case, okay, no problem. Genuine case. Otherwise, pay now more. 3 lakh. Even if it is equal also. Here, expected rent is 3 lakh. Rent per month is 2 lakh 25,000. Vacancy is 4 months. Actual rent 25,000 into 8, 2 lakh. Vacant rent 25,000 into 4, 1 lakh. Overall, ER is equal to AR plus VR. 3 lakh is equal to 2 lakh plus 1 lakh. Exactly 3 lakh. No problem. Take annual rent. Doesn't matter whatever you take. It's the same. Vacant rent you ignore. No problem. I will charge vacant rent only even after adding vacant rent. Your expected rent is more means and only I'll charge expected rent. Otherwise, I will not charge any tax on vacant rent because genuinely you did not receive the money. So simply put, if ER is less than or equal to AR plus VR, then GAV will be AR. If ER is greater than AR plus VR, then GAV will be ER, expected rent. GA will be expected rent. Very, very simple, guys. All done. Now they may ask you sometimes partly let out property. 50% LOP, 50% SOP. Area wise, 50% LOP, 50% SOP. What will you do? You also should divide everything as per the ratio. If they give equal, for example, consider it as 2 houses. Your municipal value, fair rent, standard rent, municipal tax, everything should be divided area wise. They'll say 60%, 40%, 50%, 50, 30, 70, whatever it is they'll give. Guys, but don't in the calculation hurry. I will divide actual rent also. Actual rent I am receiving only from one area, no? Other one is SOP. Please don't divide. These are some tips for you to figure out. Consider it as 2 homes. Municipal value, fair rent, standard rent, municipal tax, everything should be split. Actual rent will never be divided. Do not divide actual rent. Interest. will be divided area wise and then split into LOP and SOP. Overall interest 5 lakh, 4 lakh you are paying for the entire building. What is the area? 50-50. Or interest is 5 lakh, you are paying interest only 5 lakh per annum. 50-50, 50 SOP, 50 LOP, 2 lakh 50, 2 lakh 50. For LOP, full 2 lakh 50 you should take. For SOP, either 30,000 or 2 lakh depending on what you have taken. Depending on what you have taken. What's an example where actual rent if both unrealized and vacant? That's fine. If both unrealized and vacant is there, what will you do? What is actual rent exact? It's the same, no change only. What is actual? Actual rent means what? Rent receivable plus rent received minus unrealized rent. So it's the same only. This is this formula. So if those 4 conditions are satisfied, then unrealized rent will be subtracted. If 4 conditions are not satisfied, unrealized rent will not be subtracted. That's all. Rent receivable plus rent received plus receivable minus unrealized rent plus vacant rent. So here when I say actual rent, it is the same, this formula only. So you should do it accordingly, no change. Yeah, obviously that is not practical, but that's how it is. It's like 12 months were there, in that the tenure only was for 8 months for him to stay. 4 months anyway he would be going. He just paid rent for 6 months, 2 months he absconded. So there, what is the rent received? 4 months rent. Receivable, 2 months rent. And what is the vacant rent? 6 months anyway it was vacant. That all they have not given, guys, honestly. But even if they give, it's the same. Actual rent formula only is that. So you can use the same thing. No change. Absolutely no change. This is partly let out property. Area wise, then partly let out they can give you time wise. They'll say first 3 months it was LOP, then he threw out the tenants and he shifted there. Possible. This is very much practical. He'll tell him, sir, please leave. I will now come. Yes, in that case. Or it could also be 364 days SOP. 1 day LOP. What will you do? Full is LOP. No shifting here. Only area wise you should make it. If it is even 1 day time wise, then everything is LOP. Everything is LOP. Next comes arrears of rent. Arrears of rent can be 2 things. One is disputed rent, or where negotiation is going on. One more is receipt of unrealized rent, bad debt recovery. Arrears of rent can mean both the things. One can be disputed rent or based on negotiation. I told you I was supposed to pay, I forgot, and later they said, why don't you pay 10%? I said, madam, 10% not possible, make it 5%, close. That's arrears. Second, receipt of unrealized rent. That fellow ran away for 4 months. 2 years later he came and paid back. He said, very sorry, I was a bad guy that time. I have realized that because of that cheating you and cheating many other people, I have not done well in life. So now I have to make amends by paying back that money. Somehow I managed to take this money back. It is called receipts of unrealized rent, bad debt recovery. If it's unrealized rent, you would have subtracted it 2 years ago. If 4 conditions are satisfied, wouldn't you have subtracted? Yes. What is the unrealized rent formula? Actual rent is equal to rent received plus receivable minus unrealized. Minus unrealized you would have subtracted if 4 conditions are satisfied. 2 years later, that fellow comes and gives you back the money. Should you add back and tax it? Yes. Taxable in the year where it is realized or recovered. Where it is realized or recovered. It is still taxable even if the property isn't a standard deduction. 70% is taxable. 30% is standard deduction. No other expenses can be claimed. No other expenses can be claimed. Right? It is only that amount. Why? 70% already taken, no? 30% standard deduction given. This is what? Partly let out, time-wise. Then if it is co-ownership, guys, joint owner, two children have 50, they would have said 50-50, whatever, 40-60, 40, 70-30, divided in the ownership ratio. But the most interesting thing is this one, the LOP that you are going to get, the interest portion, is it per person or is it for everyone, for the full property? Yes, per person. Excuse me. It is per person. Interest on loan, LOP, DLOP, there is absolutely no limit. You can claim whatever you want. That is understood anyway. If it is SOP, 30,000 or 2 lakh rupees accordingly per co-owner. So what is the best way of tax planning if you are doing SOP and if you are buying a house? Tax planning. Take a joint loan and take joint property. Best way. Because nowadays you won't get any house for 40-50 lakhs. You generally will go for 1 CR, which means you will at least minimum 1 crore it will be house, 80 lakhs to 1 crore. You will take a loan of 50 lakhs. 10% means 5 lakhs per annum is the interest. I'm just saying. Interest component will be 4 lakhs in that. 1 lakh will be principal assume. What is the best way to take full benefit? Joint loan. Best way to take 2 lakh per owner, joint ownership. So register the house jointly and take the loan also jointly. Then you will get the entire computation, the entire thing. Very simple. I think I'll just brush through. That's about it. Let's see. Vacancy, vacant rent is done. Arrears of rent done. Co-owned property also we did. Area basis, time basis, all that we did. Composite rent is also one concept. Composite rent is what? Agreement is separable. Composite rent. Agreement is separable. Agreement is not separable. For example, there is something called Airbnb, where there's an app called Airbnb, where you can go to whichever place. Some people will have 2 homes. One home they will let out for Airbnb. Airbnb is a company where you can host your home there. If anybody is coming to Bangalore, you can ask them to stay in your house. They'll pay 2,000. That house nobody is living, so you can ask them to live there. It will fetch you more money than rental income, because here you can charge 3,000, 4,000 per day. Even if they stay for 20 days, anybody stays for 20 days, you will be getting 80, 90,000. Normal rent you will get 40, 50,000. So Airbnb is a very lucrative option. Are you renting out the house with a fully furnished house? It should be. Are you renting out the furniture? Are you renting out the house? Or are you renting both? Both. Agreement, is it separated or not separated? Not separated. I'll say fully furnished accommodation I am giving. So agreement is not separable. This is rent of house property and other assets, income from PGBP, IFOS as the case may be. This is actually business, whatever you are doing. On the other hand, if the agreement is separable, separable means what? House property is different, other assets is different. So I am renting out, what do you say, house property separately, and I am renting out the furniture also, top end furniture separately. I am renting 2 separate agreements I have made. Yes, that is rent for house property is income from house property, rent of other asset is income from PGBP or IFOS as the case may be. In this concept, we have already discussed the deemed owner concept. An individual husband who transfers any house property to his or her spouse without adequate consideration means free or less than the market value Not being a transfer in connection with agreement to live apart. In a divorce proceeding, if you give it to him, give it to the other person, it's okay. But if it is used as a tool for tax planning, deemed owner will get activated. And even though it is in the name of the wife, I will not consider. It will be considered in the name of the husband. Or likewise, spouse, whatever the case may be. Such individual is treated as the deemed owner of such house property. Then if I am in a cooperative society owns the entire apartment building. This apartment building, you are the owner, but you don't own this, by the way, because cooperative society owns this. What do you own? You own the shares of the cooperative society. Tomorrow, when you want to sell this house, you will not sell the house, you will sell the shares. Underlying asset of the share is the house. Are you the owner of the house? No, you are actually owner of the shares. But lawmaker says you are the deemed owner under section 27. Otherwise, tomorrow what I will do? I will not do income from house property. I will do income from capital gain. Why? I have shares. They say no. Shares, what is the income from capital gain rate? 10%, 15%. Correct. What is the income from house property rate? Normal tax rates. So people were doing this. All were converting to cooperative societies and buying shares. When they sold the shares, they were taking it as capital gain, long-term capital gain. Cheating. They inserted section 27 and said, cheating boss. No. You may be selling shares, I agree. But what is the underlying asset? House. So you are a deemed owner. These are all the concepts of deemed owner. That's about it, guys. House property done. So tomorrow we will be doing PGBP from 12, because I have a class till 12. Otherwise I can't take earlier than that. I'll be busy till 11:30 CA final. So after that we will be taking at 12. So bring food. You guys bring food. Online people, you can eat whatever you want, I know. But you guys bring proper food, water, all that. And then afterwards there will be maybe 2 breaks. We'll have to finish PGBP tomorrow. It's a big chapter, right? So it can be 4 hours, 4.5 hours, whatever it is. There'll be definitely a break like today, 20 minutes, and again later if need be, 10, 15 minutes, 10 minutes, short breaks. Okay, so thank you guys. Hope you understood. We did basics, full and house property. Tomorrow, full PGBP, okay? Take care. See you tomorrow. Online people, bye. See you tomorrow. Tomorrow, guys. See you. Same time, 12 o'clock. I'll send you the link for tomorrow. Bye-bye.